AI traffic has a shocking 725% increase year over year, but do keep in mind, AI traffic is still a relatively new thing out there. I spent $22,000 on one stock. This is going to be the Great Depression plus some, right? The economy got so hot that we overheated into massive inflation. Almost everybody in the developed economy has gotten a smartphone and has gotten high-speed internet, which now changes everything for the economy forever. There's also been a major fundamental shift in money in general over the past several decades that has changed everything forever. There's more than enough money out there in the economy and out there in the world. It's more than enough. You've got to keep the money circulating all the time, right? Come on, man. That's a huge opportunity. The worst thing is a billionaire doesn't spend any money. People get mad when the billionaire buys a jet. The next thing you see fall is, I would call it small ticket purchases, okay? Now, one stock I can tell you that is not dead cat bouncing, my sixth stock in the public count out of my current positions to hit a triple-digit gainer. Holy smokers, that ain't no dang jokers, ladies and gentlemen. Made money Monday, made money Tuesday, made money Wednesday. The market was closed Thursday, made money Friday. It's like the Wall Streeters went on their big vacation. This is one of their biggest vacation weeks. A lot of them leave New York City. A lot of them don't trade, do any activity essentially on Thanksgiving week. And market just green. I mean, public count, I think, was up probably around $200,000 this week, plus all my other portfolios. So heck of a week, but they're coming back. Okay, they're coming back. Now, today's a big day. It's Black Friday. We're having a huge sale on 1000xstocks.com, right? It's a big shopping day out there. People always screaming doom and gloom around the economy, like this is going to be the year people don't spend money, things like that. Well, we're already starting to get the numbers. And let me just tell you this, it's looking pretty darn good, ladies and gentlemen, okay? Adobe tracks all this sort of spending and what's going on out there. Well, here's what we have. Total season spend so far. Now, this is before Black Friday. I'm obviously recording this on Black Friday. We'll see what these numbers are tomorrow. But so far, the total season spend is already at about $100 billion, which is up almost 7%. Year over year. Definitely shows you, the economy is not doomed. Mobile spend is up 6.4% so far this year for November 1st through the 27th. That is $52.2 billion. AI traffic has a shocking 725% increase year over year, but do keep in mind, AI traffic is still a relatively new thing out there. So that's just growing exponentially right now. It's incredible. So I guess people are using AI to shop, and I'm sure that trend is going to continue on for the next, probably 1 to 2 decades, including just getting bigger. My wife's out there shopping today, and she told me that it is very, very, very busy out there. That's what she tells me. As far as how's the Black Friday sale going for 1000xstocks.com, it's going very well. As of 10 a.m., already 391 people have joined the $49 tier, and 36 people have joined the 3-year $1,500 sale. Now, do keep in mind with that sale, a little different than people going to buy a flat screen TV, or people going to buy a new mixer for their kitchen, or people going to buy, a new pair of shoes or something like that. This is people that have made probably thousands or tens of thousands or hundreds of thousands or millions of dollars in the past few years, or want to level up and get the best software out there. So it's a little different consumer. And keep in mind, when you're talking about building your wealth, you want to try to minimize mistakes. You want to try to have as many bangers as possible, and 1000x helps people do that. So for somebody to drop $49 a month or $1,500 for 3 years access is literally nothing for most people out there. From that context, right? It's very different than buying a new PlayStation or a new Xbox or something like that, right? Okay, so 3 things we got to speak about here today in this video. One is, why does the economy continue to hold? Every year, it seems like people just want to put the economy in the dirt, say we're done, say inflation, and yet the numbers come in and companies report great earnings quarter after quarter after quarter. We're getting the holiday shopping spend coming through here, and it's looking really flipping flapjack and good out there. What's going on? How does this economy continue to hold? I got to dive into that subject because it's one of the most important subjects, because it's one of the things that freak people out, and they panic sell out of stocks because they start worrying about the economy. I see it year after year after year. When the market gets shaky, people start worrying about the economy. They flood out of the stock market. And if you don't understand the economy well enough, you're not able to hold through those tougher times in the market, those drama times. Okay, so we'll speak about that first in this video here today. Second thing is, I'm going to show you the entire about $3.7 million public account today. We're going to dive in deep in that. I'm going to show you what stocks I'm looking to buy more of, sell, why I love certain stocks, why I want to invest more money, those sorts of things. Okay. Third subject we'll get into here today is I spent $22,000 on one stock today. I'll share what that stock is, why I went went ahead and spent that money. That's a pretty freakish buy there. Plus, I bought a bunch of other stocks, by the way, today in my portfolios as well. One thing only I need from you guys, as a sign in my garage says, if you could just smash that little like button on this video, that's all I need from you. I appreciate you for doing that. Additionally, if you want to be subscribed here to the channel, you can certainly subscribe. We are now at 906,000 plus subscribers deep on the channel. Once again, the pinned comment down there today will be for that 1000X sale. To grab that, we're down to 11 hours 43 minutes left on that sale, so that will be pinned comment down there. If you watch this video Saturday, Sunday, the deal's already going to be over, so I do apologize. But hey, for the early birds, and they catch the worm. And we will send you your Steel membership card in the mail to you as well. So make sure your address and all that good stuff is correct in regards to that. And also make sure you guys take advantage of that education portion. Obviously, the software is why most people get it, but that education portion could help out a lot of you guys. Okay? It's kind of hidden here. It's in the other tab, but trust me, that education module is insane. So make sure you take advantage of that. Basic option strategies, advanced option strategies, how to run a portfolio properly, how to value dividend stocks, how to value growth stocks. It's for some nitty gritty stuff that you guys will really enjoy there. Okay. Alrighty, folks, let's get into this. Number one, why does the economy continue to hold? Okay. So it looks like it's going to be another great holiday shopping season. Okay. There's some things that have transpired over the past decade or two that you got to understand on a deeper level of why the economy is able to hold over time. Why every single time people want to say it's over, man, the economy's doomed, we're going to have a massive recession, it's going to be the great financial crisis all over again, all these sorts of things. Why doesn't it happen? And you've had so many things transpire over the years that people wanted to say that. 2018, we had a situation. 2020, obviously, in the Rona crash, people said, there's no way the economy's going to make it through this. This is going to be the Great Depression, plus some, right? And yet we made it through just fine. And actually, coming out of the Rona, the economy got so hot that we overheated into massive inflation. Then we got slice and dice with inflation. People said, oh my gosh, we haven't had to deal with inflation since the 70s, in the early 80s. This is going to devastate the economy, devastate the consumer. We're going to have a unbelievable recession with unemployment rates at 10, 15, 20%, right? Didn't happen. Now people with tariff drama and everything that's been going on this year, people are once again saying doom and gloom, Doge and oh my gosh, all these things, right? And yet, what do we have to show for it? Company earnings have been great, especially at the top of the market. The strongest so strong are looking stronger than ever, right? And even you got some companies starting to turn their businesses around to inflect positive. I'm thinking Nike, I'm thinking Estee Lauder, companies like that had been negative for years, right? And Adobe, as far as their total spend that's going on out there in the economy, for so far as season spend, almost $100 billion, almost up 7% year over year. Okay, so a few things you got to take into account. One is, the economy has changed fundamentally forever, okay? The invention of the smartphone and additionally high-speed internet has changed everything forever, okay? So think of it like this. Over the past 10 to 20 years, almost everybody in the developed economy has gotten a smartphone and has gotten high-speed internet, which now changes everything for the economy forever, because now people can shop whenever they want, wherever they want, as much as they want. That was never true for the economy. In the past, if you wanted to go spend money, you had to go drive somewhere to go spend that money, okay? Now, if you want to be laying in your bed at 1 a.m. and order something on the internet, it's right there in your pocket. It's right there in your hand, right? And that changes everything forever. And this is really just you got to understand, this is still kind of new. Really, it's just over the past 10 to 20 years that everybody got high-speed internet and everybody got a smartphone. And so this has been obviously taken off, and this changes the economy forever, ladies and gentlemen. The amount of more commerce can happen now because people can shop at any moment, anytime. They could be working. They could literally be working and shopping at the same time. They could be on their lunch break and shopping, right? And buying stuff, products and services out there. And the amount of new products and services that have hatched up because of high-speed internet and because of smartphone is fundamentally changed everything forever, okay? I'll give you a good example. Just last night, I was playing some like games with my kids. It's Thanksgiving, right? So, what are you gonna do after you eat big dinner like that? We were playing some games and whatnot, and we were playing some card games, and then I realized like, oh man, like it would be great to play Monopoly. They've been talking about playing Monopoly, but our Monopoly set got messed up, so we threw that away like a year ago, and I was like, let me just order a Monopoly set, right? So I went ahead and ordered that on Amazon last night, and then we were having trouble finding playing cards, and I was like, let me just order some playing cards. Like, that's not things that could have happened in the past. It's like, if I wanted to buy the Monopoly game, like I had to go drive to a store, and I might not have done that. I might have been like, screw it. Like I would have woke up the next day and be like, nah, forget it. I don't need to do that, right? Or playing cards or whatever, right? Now it's right in your pocket. Boom, just go ahead and order it right there, right? That changes everything forever. So that's massive, and this is one of the most underrated things, honestly, in the economy that no one talks about that's transpired over the last 10 to 20 years. Has changed everything, okay? I think there's also been a major fundamental shift in money in general over the past several decades that has changed everything forever. If we go back 20, 30 years ago, we were still a very cash-reliant society, right? Like people went to buy something, they pulled out a wad of cash, right? Nowadays, that has fundamentally changed in a massive way. Hardly anybody pays with cash. I only take a little stack of cash with me when I go out because I live in Vegas. And so if I'm going out for a night, it's a date night or something like that, I'm going to go out with a pocket full of cash because in Vegas, you tip a lot of people. I like to make sure everybody's taken well care of, right? And like, it's kind of hard to tip with a card when you're like, at valet or whatever. Like, it's much easier to just give somebody a 20 or something like that, right? Now, when it comes to cash money, and the difference between people using debit cards and credit cards is, in the past, a lot of people had trouble spending that cash money because they actually like had to physically get out, and it's a weird thing, but it's like they, if you had a little bit more scarcity mentality, you saw the money like leaving your little pile, right, of cash. Like, oh crap, I'm getting low on cash. With debit cards and credit cards taking off over the past 2 or 3 decades, that's really changed a lot of things in regards to people. They don't really think about their money being so limited because it's all going on a card. You're not actually seeing the money like leaving your little wallet, leaving your little stack there, right? And so that's another very underrated thing that no one really talks about, but I can tell you it's changed things massively, right? Additionally, if we think about the government, right? The government is constantly at a deficit. And this isn't just the US government, this is governments around the world. So governments around the world are really always pumping money out there into the system. Their national debts continue to grow, their deficits are massive, right? And like I said, people like to look at the US economy and be like, oh, the US is so bad. Look at just about every developed country you want to look at, okay? And you're going to see they spend like drunken sailors, okay? And so that's always constantly flushing more and more money out there into the system. Keep in mind that also helps keep inflation alive. But honestly, the US government doesn't mind inflation as long as it doesn't go out of control like it did in 2022. The US government, at the end of the day, they want inflation to be in the 2 to 3% range. Heck, even the Federal Reserve admits they want inflation, right? Their target is around 2%, right? So they're admitting there that they always want inflation in the economy. Like that's, look at the politicians in office. They're pushing for interest rates to go lower despite inflation being in the 2s. They don't mind that. They actually welcome it. And one of the reasons is the debt's so out of control. The hope is you continue to have inflation go up over time, right? Which means more tax revenues over time, could mean more tariff revenue over time, those sorts of things, right? And ultimately, it can make the debt number seem smaller and smaller. That's the hope in regards to that. Ron Barron's, dove into that subject quite in depth in the past in some interviews. But, that's the situation. The moral of the story is governments keep flooding money out there. They're going to keep, there's no situation. People thought this administration, the one that's in office right now, they would be the ones to end this. And we're going to start reversing this, and the national debt's going to start going down, and, we're going to not have deficits anymore, or something like that. And obviously that was a pipe dream, right? It's getting worse than ever. The debt's going higher than ever. The deficit's sky high. And at the end of the day, the politicians have to keep this going because if they were to stop all this crazy spending, right? And, they said no more deficit, you could have a big short-term recession. You have a big short-term recession, you're getting voted out of office and all your buddies are getting voted out of office. So no one can ever pull the plug on this. It basically just has to keep going and going forever and ever and ever, because the people will not withstand a big recession, right? And so that's why that just keeps going on. Additionally, another thing that's very underrated that people don't talk about enough in the economy, right? I just went on a walk with my son a couple nights ago, right? We went around our whole neighborhood, and it's fascinating walking around my neighborhood because basically, I would say almost every single person in my neighborhood has professionals put up their Christmas lights. And I even, we were walking and I was telling my son, oh, look at this guy, he's, putting up the Christmas lights. He was like somebody that gets paid to do this, right? And, has a whole truck and whatnot in regards to this. And they start putting them up basically the day after Halloween, and they run all the way through December to put up everybody's Christmas lights, right? And I was just thinking, like, that's not even... Like, who was paying to get their Christmas lights put up 20, 30 years ago? Almost no one. Like, that was not even a thing. It was not even a thing when I was a kid. No one paid to have their Christmas lights put up on their house. And now, basically, every single person in my neighborhood pays to have their Christmas lights put up. It's unbelievable, right? And you got to understand, there's always like these new industries popping up that previous generations would have laughed at. Like, people are going to pay to put Christmas lights up? Like, think about even 50 or 60 years ago. The restaurant industry was like non-existent. Like 50 to 60 years ago, the only people that went out to eat, it was like maybe if you're having some super special occasion. But the restaurant industry was like tiny 50, 60 years ago. People are like, I'm not paying all that money to have somebody cook. We'll cook at the house, right? And now you go in any major city in the world, there's restaurants everywhere. Everywhere you looked, and the busiest ones are packed all the time, man. Texas Roadhouse is packed every night. Cheesecake Factory is packed every night. North Italia is packed every night, right? It's unbelievable. It's unbelievable. Previous generations would have laughed at that. What? Let's go spend $100 at the restaurant? You got to be out of your mind. We don't have that kind of money. We're going to cook dinner at the house for $5. What are we talking about here, right? And so that's the other thing you got to understand is the economy grows over time. New businesses pop out that you never would have thought of been things before, right? Even remember me back in my real estate marketing days, right? Like that wasn't something, but because of the internet, right? And I was thinking about this, man. I was thinking about putting up my own Christmas lights on my house. And then I was like, oh, heck no. Like, look at how high the roof is. Like, they're starting to build these homes with the roof so high. Dude, I fall off that roof, I'm a goner. I'm going to need a parachute to fall off that thing. It's not like when my dad and I used to put up lights on the house when I was a little kid, man. It was like a 7-foot drop. Like, worst thing happens, maybe you twist your ankle, you fall off I fall off that roof? I'm not making it, man. I don't think I'm making it. Also, remember me cleaning pools in the 1990s, right, with my dad. Remember that, right? Now think about 2 to 3 decades before that. Do you think somebody like my dad could have built a business to support his family cleaning pools? Of course not. People didn't have pools like that. People didn't really start building a lot of in-ground pools really to the 70s and the 80s. And then by the time my dad starts his pool cleaning business in the 90s, right? We get out of poverty. We're able to enter the middle class as a family and those sorts of things. Like, shoot, that wouldn't have been possible. So you always have these like new businesses popping out, these new opportunities that employ people, that people make money from, right? Think about 1000X, right? I have developers that work on that product over the last several years. They make money all over the world. We have developers literally from all over the world that are able to make money from 1000X, right? I have my close team. That's all paid very well. Like almost everybody on my team makes 6 figures, multi-6 figures. I even have one person on my team that will likely, I think they'll make over 7 figures this year, right? So you got all those individuals out there. 20 years ago, something like 1000X, is that possible? Heck no. There's no way that's possible, right? Now it is possible. And a lot of people are able to have success with that, right? It's a win-win-win. The customers get to have success, right? The developers get to make money. My close team gets to make money. Like, it's great. It's phenomenal, right? Look at a company like Beats, the headphones, right? You have 2 guys, Jimmy Iovine, Dr. Dre, start that business about 15, 20 years ago, right? 2 guys that made a lot of money in music over time. They start that business, right? Factory workers and managers make a bunch of money. That I think was probably Foxconn that was building those in China, right? So that's great. They make a bunch of money. They have opportunities. Beats had hundreds of employees in the United States, right? A bunch of logistics companies get to make money off of moving all those beats around. Retailers get to make money off that. People get to get more hours at the retailers because they're selling those beats, right? That's what we call the miracle of capitalism. Something just hatches out of nothing and It's like, woo, all of a sudden it's generating revenue and it's moving the money in the economy. And the most important thing with the economy is you got to always have money moving around. If money's not moving, the economy is devastated. There's more than enough money out there in the economy and out there in the world. It's more than enough. You got to keep the money circulating all the time, right? Circulating all the time. That's why somebody like myself, I'm fortunate to be in the top 0.1% wealthiest people in the world under 40. Very fortunate. Guess what? It's also my job to make sure I'm spending money out there in the economy. I can't just hoard it all and sit in in an apartment somewhere and just hoard all the money. It's my job to keep it moving out there. I got to go to the restaurants. I got to spend on new cars, new houses, and do those sorts of things, right? I'm always going to stack more money than I'm spending, but I'm always going to make sure I'm spending out there. I'm growing. I'm employing people. People are be able to make money and those sorts of things. It's your job to keep things going. Some people get mad when they see some billionaire build some massive yacht. I don't get mad. I'm super happy he's going to build that massive yacht. You know why? Because that's going to employ, how many people are going to make money building a massive yacht? A $200 million yacht? Are you kidding me? That's the best thing that could happen. Like, the worst thing is that billionaire just sits on his money and never spends it, and never does anything in the economy. Because then no one has an opportunity. You know how many workers are going to make money building a $200 million yacht? Oh my gosh. You know what type of crew is going to have to be employed when they go, float on that thing all over the place, all over the world? Come on, man. That's a huge opportunity. The worst thing is a billionaire doesn't spend any money. People get mad when the billionaire buys a jet. I'm like, good. That's a bunch of people are going to make money off that. You got to keep money circulating. You got to keep money moving around. As long as you do that, the economy can always be in a great place because there's more than enough money out there in the worldwide economy, right? Look at all the companies we respect the most, the biggest companies in the world. Nvidia, $4 trillion plus market cap. Apple, a $4 trillion plus market cap. Google, $3.8 trillion. Microsoft, $3.6 trillion. Amazon, $2.4 trillion. Meta, $1.6 trillion market caps, right? Think about these companies. They're not even that old. Nvidia started at a Denny's in the 1990s. Apple started in a garage in the 1980s. Google McDougal started in a garage in the 1990s. Microsoft started in a garage in the 70s. I believe it was in New Mexico. Amazon was started by a super smart guy, Jeff Bezos, actually a real genius. And, if you want to look at his background before he even started Amazon, it's very, very impressive. And he started that at his house in the 90s, I think in Seattle, if I recall. Meta, Zuckerberg started that in a dorm room. And look at these companies. They're $1 trillion plus companies now. We call it the miracle of capitalism, ladies and gentlemen. Think about how many people are employed by these companies. Think about how many people have made fortunes on these companies, either because they were investors over the years, or because they were employees and they got stock options over the years, or because they're employees and they were just very highly paid at these companies, right? That's a miracle of capitalism. You grow from nothing. You start a business in your house, and now Amazon employs 2 million people or whatever crazy amount it is. It's ridiculous, right? Think about that for a moment. Like, it's unbelievable. That's the miracle of capitalism. That's one of the most underrated things, and it continues on, right? Now, additionally, there's always more debt out there in the economy. Outside of really the great financial crisis, debt levels went down for a short period of time, for a few years there. But usually the debt's always climbing higher, right? Debt kind of gets created out of thin air, and boom, there's money out there. There's a mortgage, there's a car loan, there's a personal loan, whatever, right? Now, you might think, like, there's so much debt, it's got to be out of control. It's got to be unsustainable, right? I'm going to show you one of the most underrated charts no one looks at. What I'm showing you right now is the United States household debt to GDP ratio, okay, as a percent. This is unbelievable. Ever since your parents and grandparents were born, basically this number had been climbing and climbing and climbing for decades, basically all the way since the 1940s. And then guess what? It peaked right here at the Great Financial Crisis. And ever since then, it's basically been on a long downward trend, all the way to where we are here, and it's still coming down. So that's one factor I think is very important you look at. Household debt to GDP, I think is one of the most underrated things you can look at. Because I think it gives you a better glimpse of, like, you hear about, there's a certain amount of credit card debt or there's a certain amount of consumer debt. And you look at something like this and you're like, if anything, debt levels were actually out of control back in the day. And if anything, they've been coming down. And the thing is, like, we don't even know where the bottom is here. It might continue to go down. We might go down to levels we were back in the 90s. That's pretty darn shocking, right? So you want somebody to be bullish about there. We reversed something that was really bad, right? Now, additionally, you got to understand the miracle of capitalism in general, right? Just the other night, I was showing my kids this city in China, Chongqing. I'm not Chinese. I don't know how to speak Mandarin. So although I did try long time ago, but it's unbelievable, right? They show this, what this city looked like back in the 40s, and it was just like, a situation, let's just call it that. And you see it nowadays as one of the most technologically advanced cities in the entire world. Unbelievable, right? What can happen over, just a couple, 2-3 generations of people. You think about the United States of America, we think about like the United States so old. It's not old. The United States is like 250 years old, right? And over that time, built from nothing into the most powerful economy ever, right? $30 trillion plus in GDP per year, and did that in 250 years. That's literally nothing. Like, think about how long humans have been around, okay? Think about how long Earth has been around. Think about how long the universe has been around. Like, this is nothing. Absolutely nothing. And to, in 250 years, go from nothing to a $30 trillion plus a year GDP is almost unfathomable, right? On like, how could that happen? And that has happened. So understand the economy gets bigger, more and more money's made, more and more success. The money doesn't just like go into the outer space and just disappear. And that's not the way it works. The money's always here. There's always more of it being here. Every day, there's more money than there was the day before. Every day, there's more money than there was the previous day. Okay? And it never leaves. And so the biggest thing is you just got to always keep that money circulating and party on, baby. Okay? That's why the economy is so hard to kill. And that's why everybody that tries to make these predictions all the time about the economy is doomed and gloomed, tough thing to make, right? You're trying to make a call on a very short-term thing that might happen in the economy, and just, it's very, very difficult. Very, very difficult, okay? Alrighty, next thing up here, let's look at the around $3.7 million public account. Take a look at this. I'll share my opinion and perspective, then we'll get into the stock I bought $22,000 worth of today. Okay, so looking at the public account, today I actually bought more Adobe in this particular portfolio today, and that portfolio, so Meta's a big dog in the portfolio, 28% weighting. And the nice thing is, since Meta stocks come down a bit and AMD's gone up so much, actually it's looking a little more even. There was a point where Meta was like 38% of the public account, like it had gotten to really high levels. I think it got up to almost 40% at one point. But since a lot of other stocks are rolling now and Meta's come down some, it actually is a little more even weighted. So that's 28% of the portfolio, sitting on $852,000 of gains there. AMD, and we're now sitting on $270,000 of gains on that one. That's about 15% of the portfolio. Amazing's on is sitting on $143,000 of gains, about 10% of the portfolio. Nike's sitting on a $35,000 loss as of right now. It's about 5% of the portfolio. Palantir, $161,000 of gains. Obviously, I've sold the far majority of my Palantir shares this year because of, the valuation just went so insane. So, it's still a great percentage gainer, but the dollar amount doesn't seem that huge because I already took the big profits. But almost a 2,200% gain on Palantir, 4.5% weighting on the portfolio. EL stock now up $44,000, 4.5% weighting. Celsius, $66,000 of gains, 4.4% weighting. Cheesecake, $22,000 of gains, 4% weighting. SoFi, $107,000 of gains, now up 250+% on SoFi. SoFi's been a banger. That's about 4% of the portfolio. Google McDougal, now sitting on, that one's over doubled up our money now, sitting on $72,000 of gains. That's about, we can call it right around a 4% weighting in the portfolio there. So yeah, it was a good buy. That was a very, very good buy back in April for me there. PayPal sitting on $4,000 of gains, about 3.6% weighting. Adobe, we're actually down almost 9% on Adobe so far. We're down $9,300 on about a 2.7% weighting there. ELF up 946%, up 68,000. That's only a 2% weighting in this particular portfolio. ELF's a lot bigger weighting for me in some of my other portfolios. Do keep that in mind. Yeah, this is actually a small position for me compared to some of my other portfolios. I have much bigger positions in ELF than this. Fubo, up 15,000 on this one so far, 34% gain, 1.6%. Honest, 1%, 1.5%. Then we have American Express, Revolve. We have the Tesla Hedge, CRM there. Okay, $1.77 million of gains, and obviously it doesn't account for all the gains taken over the years, including, I've probably taken easily $500,000 of gains so far this year. in the public account. Okay, so where are we at here? What am I thinking? Meta. I would love to add more Meta. It's a steal deal here. I can't. It's 28% weighting in the public account. AMD, same exact situation. AMD still a buy in my opinion. It's likely headed to 300. Probably, I wouldn't be surprised if it's 300 in the next few months. But that one's still, it's too big of a weighting in the portfolio, 15%. You got to always account for what if you're wrong, right? Amazon, around 10% weighting. That one I could add a little bit more to. I wouldn't mind it. Nike, I'm probably about good with Nike in this particular portfolio, although I think it's a great price right now. It's about a 5% weighting. That's about what I feel good with there. Palantir, obviously not looking to add any more Palantir. This 1,000 shares, I'm just trying to really hold it for the super long term, just in case like Palantir becomes $1 trillion market cap or something like that, and it does like way better than I ever assumed. Estee Lauder, EL. So EL, basically Palantir, I have a bull case where Palantir is still a buy right now. My base case, Palantir is no longer a buy. It's actually dead money for the next 4 years. But just in case my bull case comes through, I got it there. Okay. Estee Lauder, I would love to add some more EL, but I'm probably about good. It's, about a 4.5% weighting there. Celsius remains a buy now, but I'm probably good with Celsius as far as a weighting there. It's about 4.4% position. Cheesecake, I could definitely add this one. I wouldn't mind getting this one up to over a 5% weighting here. So Cheesecake's one I would like to add more to. SoFi, I'm good on SoFi too, about a 4% weighting there on this one. Comfortable. Google McDougal, I would have loved to add more Google, but Google's gone up so much, I don't actually think it's a big opportunity now. That doesn't mean Google can't make money over the coming years. I think it can still be a money maker over the coming years. If I didn't, I probably wouldn't own the stock. But the big money's been made now in Google. Like Google was a double up opportunity back earlier this year. And if you missed it, you missed it. It's just, like I said, there can still be money made here. It's just not the sort of money you had an opportunity to if you were buying 6, 7, 8 months ago. PayPal, I would like to add some more PayPal. I wouldn't mind getting that to a 4 or maybe a 5% weighting here from 3.6%. Adobe, definitely would love to add more Adobe. I could feel comfortable having Adobe as a 10% weighting. That's how confident I am in Adobe in the current valuation on that stock. I could feel comfortable having that as a 10% weighting in this portfolio. ELF remains a buy, no doubt about it. Fubo is speculative, obviously, but that one remains a buy in my personal opinion, although I'm mad at Fubo right now because they took away CNBC for right now. They're in a dispute in regards to that. Honest is a huge buy right now. Huge buy. Like that one, the fact that the stock's trading for 2 something, people fundamentally don't understand what's going on with Honest, the changes that are happening there and how they're extremely positive. And, I think, within 12 to 24 months, I think people will see the light and then they'll realize, oh, Honest should be a $5 plus stock. So they're just missing it in regards to that one, in my opinion. And when I say missing, I'm talking about the investors, not the company. The CEO is doing an amazing job running that business from almost bankrupt to, oh my gosh, cash pile to the sky. They're making positive changes, profitability. It's unbelievable. American Express is a great buy right now. The risk reward profile there, in my personal opinion, is phenomenal. So I would love to add some more Amex. Could Amex, if Amex was 10% weighting, I would have no issue with that. I could even take it at 15%. As a company, I feel very comfortable with. Revolve remains a buy. I actually bought that one in the Patreon portfolio today. Didn't buy it in the public account, but I bought it in my Patreon portfolio. And that one remains a buy, up 116% so far on that one. The Tesla hedge, I'm holding that for now. If things get shaky in December and market downdrafts, NASDAQ downdrafts, Tesla gets hit hard before year end, I could go ahead and cash out of that and put that into some long positions, maybe in Adobe or something like that. CRM, great buy right now, in my opinion. I would love to have that as like maybe a 5% weighting in the portfolio. I probably wouldn't want to take Salesforce to 10%, but 5% I'd feel very, very comfortable with there for the public account. And so, yeah, I'm good. Am I looking to add any new stocks to public account? Not right now. I'm too busy with some opportunities. There's a lot of opportunities in the public account that, I just don't want to get distracted with buying new stocks in there when I'm not even done building out some positions. Like Adobe, I need to build that one a lot bigger position. Honest, I would like to build that one a lot bigger position. American Express, I would like to build a lot bigger. Salesforce, I would like to build a lot bigger. Cheesecake, I would like to build a lot bigger. So there's several stocks in here that are very attractively priced right now. And I want to get distracted by buying some new stocks in this portfolio when I still got unattended business here of adding to some of my current positions. And sometimes you just got to do that with your portfolio where you say, I'm focusing on what I've been buying and not focusing on new stock at the exact moment, right? Alrighty, next one up here. Stock I spent $22,000 on today, and it is Adobe, ADBE. That was filled at $321. So very big buy, 69 shares here today of Adobe. Yeah, Adobe, I spoke about that one in this video here, the number one stock I'll buy the remainder of 2025. So if you want to check out that video there, you certainly can. It looks like 113,000 people have gotten to watch it so far. I think I even shared my Adobe projections in that video as well. So definitely enjoy that one, folks. Alrighty, we have 11 hours, 11 minutes, and 11 seconds left on the 1000X sale. There will be pinned comment down there. Once again, if you watch this video tomorrow or the next day, it's already going to be over. So it is what it is. But for everybody that gets to take advantage of that, it's amazing. This is our search feature. Look at all the mandatory metrics and all the advanced metrics. It pulls it up in like a second. And then it shows you where many stocks are trading at. To run through all of this, right, what I'm showing you right now, and to try to do it yourself, it would take easily 30 minutes to an hour. Easily 30 minutes to an hour. Then you could compare three companies versus each other. This was something I used to do back in the day, and it would take me an hour easily to write down or jot down all the different metrics all these different companies are at versus where the market's at in general to try to figure out, okay, because everybody's fighting for your money, right? When it comes to stocks, this stock versus this stock. So you want to compare and contrast and be like, is this one actually a better buy? Or is this one a better buy? Who's got these net margins, gross margins? You got all the advanced metrics, unbelievable, right? We have our charts feature, which we just continue to add to. I can't wait to continue to add to that next year as well. That features. Oh, so beautiful. So beautiful. We have our intermediate projections, which I think is arguably the most important thing on the entire service. And this is where you can plug and play your numbers, your PE ratios, and then you start to find out, is a stock a great buy? Is it not a great buy? What's the bull case, base case, bear case? You begin to think differently about stocks, think on a higher level. We have advanced metrics as well. So when you're really high level and you want to go big dog, you can go big dog. These are things that if you wanted to build out your own spreadsheets and do all this, oh, it was such a pain in the butt. I used to do it. Oh, it was unbearable back in the day. And I can tell you 99+% of people are not willing to do all that. And then I used to have to try to drag and drop like what the company's estimates were for this year, next year. And then, oh my gosh, was it a hassle. Now you can do all this stuff in seconds and minutes. It's amazing, right? We have our earnings call tab where we have basically AI transcripts. Plus we have the earnings call. You can adjust the speed you want to go. Transcripts as well. Then we have our SEC filings. So you can see our insiders of the companies are selling, buying, what they're doing there. Read up on the companies, 10Ks, 10Qs, all that good stuff, right? Then we have our stock market terminology section. This is in case you're confused about like, what is a 2-year forward P? Like, how does that work, right? What is a 2-year stack expected EPS growth? Like, what is that exactly, right? We have all the market terminology explaining to you like your 5 type stuff, right? And then we have our education portion, which is unbelievable. So that's going to help a lot of beginners in the market, and it's going to help some intermediate investors as well. And we got more in the pipeline with 1000X. I just keep adding to it. Developers are always working on stuff. I have been working on a lot of back end stuff right now for smoothness, but man, we got a bunch of stuff in the pipeline in regards to next year for front end features and whatnot. So just continue to build it year after year after year, make it stronger, make it better. And we will send you a beautiful steel membership card to your house once you join us in there. That will be pinned comment down there. Oh, here we go, ladies and gentlemen. It's about to be 11 hours, 11 minutes, and 11 seconds. The Wall Streeters all go on vacation this week, and we just party on back to back to back. Great days for the public count. I believe a few days ago, $90,000 up. I believe yesterday was, I want to say $55,000 up or so. Today, $40,000 plus up. Man, we just got to keep these Wall Streeters on vacation at this point in time, right? Some big movers in the public count here today were ELF up over 4%. Look at AMD. People were panic selling that stock just yesterday. Just yesterday, they were selling it for $195. Same people are buying the stock for $215 today. Unbelievable, right? Honest up big here today. Estee Lauder up big. SoFi up big. Palantir up big. Like just a good day overall. I said yesterday on X, I posted this. I said, I'll make this simple. AMD, buy. I posted that yesterday morning. I couldn't believe. I'm like, this is ridiculous. People are selling the stock off because of this crazy news. This is the last video I will be recording before Thanksgiving. So happy Thanksgiving to everybody that will be celebrating out there. Hope you guys have a great one with your families. I know I will be enjoying mine. 3 core subjects I want to speak about here today in this video. One is my thoughts on this market when these Wall Streeters come back from vacation on Monday. Okay, so we only have one trading day between now and then. That is going to be Friday, which should be a shortened trading day. And then they're back. The Wall Streeters are back on Monday. So what are my thoughts about it? Do I think the market's going to start going back down again? Do I think it's going to hold up? I'll share my opinions and perspectives there. Second thing we're going to get into in this video here today, I'm going to give you 4 tips for everybody watching this today to become a much better investor. You do these 4 things, you're going to become exponentially better investor, okay? And so I thought I'd do a little bit of learning today, I guess you can say teaching, okay? Third subject up here we'll speak about here today is the number 1 stock. I've made a decision on the number 1 stock I want to focus on buying for the remainder of 2025. So I'm going to share that stock in this video, why that stock specifically. I'll also share my entire buys watch list here in this video here today, but specifically we'll get into that stock a little bit. One thing only I need from you guys, if you could please just smash that little like button, that little thumbs up button, make that glow for me. I appreciate it. Everybody that's already done that, you didn't even need me to say anything. I appreciate you guys. Additionally, you might want to subscribe here to the channel. We're now at 900,000 plus subscribers strong. Big deal. Here it is, folks. We're only a little over 24 hours away from the massive Black Friday sale on 1000X. Pinned comment down there. Click on that, fill that out. Get ready for that deal to receive that deal over. It is we're going to send the deal out on Thanksgiving night, essentially. So just over 24 hours from me recording this, essentially. And when you join us in there, we'll also send you your Steel membership card in the mail to your house, complimentary. And we now have 2,176 people ready for that sale. We need a lot more people than 2,176. Everybody watching this needs access to that deal. We're going to have a monthly deal, 50% off a monthly membership, and we'll have 50% off a 3-year membership. So whether you want to join on a monthly basis or a 3-year basis, we're going to have a deal for you. Okay, so make sure everybody takes advantage of that deal out there. And man, FedEx, UPS, they better be ready because we're going to be sending out a lot of Steel membership cards very shortly here. Okay, alrighty guys, so first subject up of these 3, my thoughts on this market and all those sorts of things when these Wall Streeters come back on Monday. Are we going back down to Chinatown? Here's the deal. When I look out there, the most important thing to kind of drive market sentiment recently has been Bitcoin and Ethereum. No, Bitcoin and Ethereum bottomed last weekend, and then they started to come back very strong, right? And ultimately, the markets trended up as well, right? I will be watching Bitcoin and Ethereum like a hawk over the weekend, Saturday, Sunday, essentially, because I'm going to be looking for weakness in those 2. If Bitcoin and Ethereum start to weaken over the weekend, that is a very bad omen for the market. I mean, a very bad omen. That basically means like this was just a short-term little like pop here, and we're going right back down essentially. If those start to see a lot of selling pressure. So keep a close eye on that, because that's going to ultimately let you know what's going to happen in the stock market this upcoming week. If all of a sudden you start to see Bitcoin falling rapidly, Ethereum falling rapidly, likely markets going right back down to Chinatown as well. So do keep that in mind, okay? This week that we have coming up here, here's a deal, okay? If selling resumes next week, okay, and it doesn't matter all this positivity we had this week of Thanksgiving week. If selling resumes right back, Santa's not coming to town. Santa's not coming to town this year. That's the bottom line in regards to that. If even with all this positive momentum, retail buying, algos setting the market up, if it just goes right back to selling next week, Santa's not coming this week. I shouldn't say this week. I should say Santa's not coming this year, essentially. And we can talk about the market maybe resuming the bull rally in 26. But yeah, okay. Now, you got to remember, a lot of people are assuming and a lot of people want December to be a great month for the market. And keep in mind, most of the time, December is a phenomenal month for the stock market. It's one of the best months for the stock market, right? But it's not always, right? And I've told you guys a million times, this year reminds me a lot of 2018, just, a softer version of 2018, essentially. And remember, in 2018, everybody wanted it to be a great December. They thought it would be a good December, right? And what we had is relentless selling. It started right off the bat, first week of December. And that's why I said this week is key to knowing if Santa Claus is coming to town or not. Because if you see that selling basically resume right in this very first week, we're going down. We're going down, okay? In 2018, you had relentless selling right from the jump. Monday, December 3rd, boom, right there it started, the selling. And it just kept going and kept going and kept going all the way until Christmas. And then finally the selling subsided and the market started to trend up. I think I've showed you guys this headline before, but if I never have, it's a very important headline because it makes you think, oh boy, December can get a little crazy. The stock market is on its pace for the worst December since the Great Depression. That was December 17th, 2018. Look at this. Look at that. 2018. We were on pace for the worst December for the stock market since the Great Depression, since 1931, man. It was rough. Got rough out there quick. And it wasn't like we had any black swan event happening at the end of 2018. And that's the thing. Like, people assume, like, oh, the only way it could get rough in a December is like you have to have some. No, you don't. You don't have to have some black swan event. The market could just go down. Like 2018, we didn't have some black swan event. Like, Trump wanted the Fed to lower rates, and people thought the Fed wasn't going to lower, and all these sorts of things. Like, it was just a lot of like little drama. People thought tech stocks might have been overvalued. A lot of the same stuff actually that's going on exactly right now. That's why I said it reminds me so much of 2018, because it's all the same crap is going on right now that we actually had in 2018. People were worried about Apple's growth rates. Apple was the biggest stock in the market at that particular time, and what that meant for the market. And they're also worried about some other big tech stocks at that particular time. No different than now. People are worried about Nvidia. Nvidia's the top of the market, right? So same story, just different a year, right? Same story, different day. Now, something I do like is I like that 10-year going down. I do like that 10-year. 10-year just went down under 4. And I think this is like, no one's even paying attention to this right now. I'm like, I like this. Okay, 10-year under 4. It's interesting. We know this 10-year is going down, man. We know it's going down. It's just a matter of time. If you can get some more fear into the market in December, you can have some more sell-off pressure, right? We could get that 10-year much lower. We could get that 10-year down to a 3.7, 3.8 number, right? Which would be a huge downfall from here, essentially. And then we can talk about getting that lower in the front half of 2026 as well, right? Now, keep in mind, if December does sell off, okay, my thought has always been, as far as how far we sell off in this market, I've always thought we'd sell 10 to 15% off the NASDAQ from all-time highs. So my guess is, if I had to place a bet one way or another, I would place the bet that the market should go down a bit in December. With that being said, will I be placing a bet in the market going down in December? Absolutely not. Who knows? Like, the market's crazy. Like, who knows? Maybe Santa comes to town and we party on. Like, whatever. Whatever happens is whatever happens. It means nothing to me at the end of the day, and it should mean nothing to you. You know why? Because we buy the dip and we never trip. And so if December, the market sells off further, and a lot of these stocks that are great deals right now today get even to greater deals, right? And we got more tax loss harvesting, more fear in the market. It's great. No different than, 2 days from now is Black Friday. We're going to have the big Black Friday sale for 1000X, but also every retailer out there is going to be having Black Friday sales, and everybody's going to go shopping and love all the Black Friday sales and spend money like crazy, right? That's the same way you got to look at the market. Like, if December's crazy and the market goes down, great. We get Black Friday pricing on stocks. We're already getting great deals, and we just get better deals. That's fine. Most 90% plus of the people that watch my channel, you're workers. You work for companies or you run your own business. 90% plus you guys. It's only a very small segment of people that watch my channel that are retired, right? And so if you're working or you got a business, you got more income than expenses, you're ready to buy the dip, never trip, get even better price on stocks, because you make even more money long term. That's the name of the game, ladies and gentlemen, okay? Alrighty, next up here, 4 tips to become a much better investor. Let me give 4 tips out here. I think this should help a lot of people out immensely. And then we'll get into my number 1 stock in my buys, watch list, all that good stuff. Okay. Number 1, I call this one Mr. Simple. More income than expenses. It's the simplest one you can do. It's the key to financial success in life over everything else. Have more income than expenses. Okay. I started this way back in 2008. And I did that all the way to 2014. And that's how I built my first big nest egg of $200,000, which, I guess $200,000 was worth a lot more in 2014 than it is today. But that was impressive for me. Remember, I started as a guy cleaning dishes at Einstein Bagels for $7.50 an hour in 2008, right? So then to bring my net worth up and be able to have a portfolio of $200,000 worth of stocks in 2014 was a huge come up for me, right? That was massive. And able to do that because I had more income than expenses, so I was constantly funneling money into great companies, and those companies made me a whole bunch of money, and it piled up, right? And next thing you know, I was in a great position. 2015 to 2016, I took 2015 fully off because I was my firstborn son's first year of life, right? He was born toward the end of 2014, so I left Quick Trip and then just, enjoyed that year, his first year of life and took care of him and all those sorts of things, and it was a great time, but it was brutal from a financial perspective. It sucked. It was not fun financially. To have no income, and just be living off my stocks, it was not fun, man. And then 2016, I started my real estate marketing company, but that year I also didn't have more income than expenses because I was just getting my businesses up and rolling at that particular time. So those 2 years financially sucked, man. I can tell you, you take away that income, it gets a lot harder in the market because, you know, you're in a situation where you then get dips in the market and you're not able to buy them because you don't have more income than expenses, right? Because you're not working. And that's what I wasn't doing at that particular time. It's brutal. It's brutal to go through that, man. And you're looking at like these great deals. And so what I got caught up into in that 2015 time is I got caught up in a margin where essentially there was stocks that were falling that I'm like, this is a steal deal. Like one specifically, I remember Wynn stock dropped to like $50 or $60 in 2015. I'm like, this stock is such a steal deal. And I started margin out money, and then the stock just kept going down more and more. And I'm like, this is ridiculous. Like they're going to be open in Wynn Palace. Like this is so like stupid. The stock is trading at that, and I kept margin out heavy. And next thing you know, I got margin calls. Oh, it was brutal, man. Absolutely brutal. I'm telling you, investing is easy mode when you have more income than expenses. Like that's the biggest key to anything. Like it's just the biggest key. And then I got my business up and rolling 2017 all the way to current day. Always have more income than expenses, man. You gotta do that. Number 2, listen to conference calls. It's one of the most underrated things to be a successful investor in the market. There's a few reasons why. 1, you're going to learn about the businesses on such a deeper level than what you currently understand, essentially. And so in those conference calls, keep in mind, they got usually all the most important executives on those conference calls. Analysts ask them a bunch of questions. And I'm just telling you guys, you're going to be able to learn about those businesses on such a deeper level than you ever thought possible. It's so underrated, okay? Additionally, you're going to be able to get intel on those conference calls that a lot of people are not even aware of. You're also going to get, if you listen to enough conference calls, you're going to be able to start picking up on, we're humans, right? And so as humans, sometimes you're going to divulge information without fully divulging that information. It's no different than being a great poker player, right? I went down to play some poker last Friday. I hadn't played poker in quite a while. Everybody at that table, I think, was 55 plus. I was by a mile the youngest person at the table, right? I only lost like $50. I was impressed with myself. I started with 300. I played for quite a while, so I was like impressed. You know why it's so hard playing against those guys? They've been playing poker for like 100 years, and those guys are almost all of them are retired. They just sit down there, play cards all day. I don't do that for a living. I don't just go play cards. So me to hold my own is difficult. Is a difficult challenge, right? But those guys, they can look at somebody like myself and like, I'm going to divulge information without even realizing it. And so I go to make a good bet because I got actually a good hand. And what do? They fold out. And then if I'm trying to bluff, they know I'm bluffing. You know why? Because they do this all the time. Like somebody like myself goes down there, it's easy money for them. And so you listen to more and more conference calls, you get to that sort of level where you're going to be able to start listening and hearing information that is not necessarily said, but based upon tonality, you're going to start picking up on it and being like, oh, they're onto something here big. This is, oh, there's something they're worried about here. You're going to be able to pick up on all these things that it just comes with experience, years and years to listen to conference calls. I can hear things in conference calls that are never said. I don't know if that makes sense, but I hope it makes sense to you out there. Okay, so listen to conference calls, so underrated. It's one of the biggest things. You can go to a company's investor relations web page and listen to a conference call that way. If you use 1000X, we have the trifecta for you. The trifecta. You can listen to conference calls. We have it dated way back, like conference calls to years ago, if you want to really go back that far and listen to them, as well as the most recent ones, right? And you can adjust the speed. So if you want to listen to it slower, faster, anything like that, you can adjust the speed. We also have the conference call transcripts. So if you want to read through what the conference call said, and sometimes that happens to me, like I actually read through conference calls transcripts quite often, because what might happen is somebody might have an accent that is a little hard for me to understand. I'm like, wait, what did they just say? And so I go back and read the transcript and I'm like, oh, okay, that's what they said there, right? And the third thing we now have is basically we have an AI program that will basically sift through the conference call and give you the highlights of the most important things that happened on the conference call as well. So it's a trifecta. So yeah, you can go to a company's investor relations page, listen to a conference call that way, or use 1000X and just get the trifecta there, okay? And basically just type in any stock you want, any ticker symbol, and boom, all the conference calls will pop up, transcripts, AI, summaries, all that good stuff, okay? Number 3, learn GVD invest GVD, growth value dividends. I preach this over and over again. And a lot of people, it doesn't hit them until you get to a bear market. And then they realize, oh, that's why GVD is so important. Growth value dividends. This is my investing principle on how I get through every bear market, make it out to the other side, and then the bull markets absolutely make more money than I ever dreamt. GVD, I call it 1, 2, 3. This boy right here, he was coached by his father. His father was a professional boxer, and since the age of 3, taught him how to box. And what his father did is he made sure his son knew how to do everything in the ring, how to handle any situation. He made sure his defense was impeccable, his conditioning was impeccable, his power was impeccable, and his speed of punch was impeccable. And he knew how to handle every single situation that's thrown at him, every single fighter, right? Then when his dad went to jail, his uncle, who was also a professional boxer, took up and taught him everything he possibly knows, right? And made like about as perfect as a boxer you could possibly make. And that boy grew up to be somebody named Floyd Mayweather, arguably the greatest boxer ever. Never lost a professional fight ever. Should have won a gold medal in the Olympics, but got absolutely robbed. One of the worst officiating, judging situations you might have ever seen in the history of boxing happened to him. The kid got his gold medal stolen from him. Let's just put it that way in regards to that matter. And so made pretty much the perfect boxer. And so the way I think about that is the way I would think about investing, right? If you're a boxer and all you know how to throw is one haymaker and like you're really powerful, think of like Mike Tyson. Mike Tyson, oh my gosh, he was so powerful, right? Mike Tyson got knocked down a whole lot of times. He lost 6 fights, right? Because at the end of the day, his defense wasn't quite there. You know, he wasn't ready to handle all sorts of situations, so he lost plenty of fights over the years. But man, did he have a power punch, right? You want to make a perfect boxer, they got to be great at everything. And so the way I think about it is nothing scares me in the stock market the same way if you're a great boxer, like nothing should scare you when you step in the ring. You're ready for everything. And by investing through GVD, growth value dividend stocks, nothing scares me. Send the market through a 2-year crash. That's fine. I know how to handle that. My portfolio is positioned to handle that. Doesn't mean I won't get hit. Same way that you get in the ring, even if you're a perfect boxer, even Floyd Mayweather is going to get hit sometimes. That's fine. That's cost of doing business. That's a part of this game. But I'll be able to make it through that 2-year crash just fine and out to the other side and ready to make more money than I ever dreamt, right? And then additionally, send the market up a ton. I'll be ready to handle that as well. Send the market to bubble valuations. I'll be ready to handle that. I'll just step back on as many growth stock buys and I'll focus more on value and dividends and hedging and those sorts of things, right? Doesn't matter what happens in the market. I'm ready for it. I'm ready for any punch the market throws. It literally doesn't matter because of my investing principles in GVD and the way I position my portfolio, okay? That's how you play this game. Number 4, run projections. You've got to run projections on your stocks. A bull case, a base case, and a bear case has to be done for your stocks out there. I used to do this years ago through like a spreadsheet, essentially, right? Before I built 1000X, I would do it through a spreadsheet. It would take forever because what I would do is I'd have to import all the company's like recent numbers. Then I would have to look at what are all the analyst expectations for the company's current year. And then I would make my adjustments about like, I think the revenue growth of this company might be here and the net income growth might be here and the margins might be here and those sorts of things. And I'd run, a bull case, a base case, and a bear case for that particular stock. Took forever, but I used to do it that way, right? The great news is now on 1000X, we have that rate for you. We have intermediate projections and advanced projections. It saves you so much time, it's ridiculous. This is our advanced projections. That's big boy stuff. That's big boy stuff, okay? Not everybody's ready for advanced projections. This is intermediate projections. Not even everybody's ready for intermediate projections, but this shows you like how we do this essentially, okay? So, bull case, we already have imported what 2025 expectations are, so the year is about to flip, so then we'll have 2026s go here, essentially, right? And then you can run your projections and alter like growth rates, revenue growth rates, net income growth rates, where net income margins are going, what's a fair PE for that stock over time. You might say, well, how do you get the confidence to even, plug in certain revenue growth rates, expectations, and net income growth? You want to look at how the company's been growing recently, what they've guided to, what the overall trend has been for the company over the last several years, and also listen to those conference calls, read up on the companies, the SEC filings, those sorts of things, and you'll be able to understand the company on a higher level. So when you go to make your projections, you feel like you're confident actually going to make those projections, right? So bull case, this is for a stock, American Express, right? Perfect example. So American Express, My bull case for Amex is basically they grow revenue 10% per year on average, nothing crazy there, right? 26 through 29, and 15% net income growth gets them to net income margins of 17%. If you had a company like Amex that's as sticky of a business model as that is, growing revenue top line 10%, bottom line 15%, 30, 35 P is pretty fair for a company like that. I get a CAGR, let's call it in the 20s, mid 20s. Very, very nice, right? Now, base case is just a fancy way of saying my expectations with maybe a slight bit of conservatism in there. I have revenue growth of Amex of 8% on average per year for the next number of years. They get to $103 billion of revenue, right? All the calculations are done for you. You just enter in the growth rates. Net income, I have them doing 12% on average. That gets them to $17 billion in net income come 2028. A 28 to 33 PE is pretty fair for a company like Amex growing at those sorts of growth rates. That gives me a CAGR rate around 20%. That's what I'm looking for in a stock. If I can run a base case that's relatively conservative and I can get a CAGR of around 20% expected over the next 4 years, I'm going to take that every time. I'm going to take that every time. The best part is when you can run your projections on a stock. Like I ran Amex here, only 5% revenue growth, extremely low. This would be pretty disastrous if Amex only grew revenue 5% per year, 2026 to 2029, and only 8% net income growth 2026 to 2029, 20 to 25 PE here, and I still make money. That's the trifecta. If I can get a mid 20s or higher CAGR in my bull case, around a 20% or higher base case CAGR, and I can still make money in my bear case, we're set. We're set, man. And so, that's why a stock like Amex is very compelling to me right now, right? But that's how you got to play this game. And you got to run through these different scenarios so you can understand what your risk is, what your reward potential is in regards to these stocks. And then you can actually get a feeling of I'm buying the stock and I'm getting a good deal on it, or I'm getting ripped off, right? Because there's going to be some stocks you come across sometimes and man, that's a really exciting company. I really like where they're going in the future. And then you run your projections and it's going to say this stock is not a buy right now. It's going to say you're getting ripped off essentially. Your CAGR is not very attractive. And so for instance, if I ran Palantir projections 3 years ago, Palantir was a steal deal. Absolute steal deal. I could run my bull case, my base case, and my bear case, and all of them said buy Palantir essentially, right? And then if we fast forward to earlier this year, Palantir goes 200 plus. I was running my bull case, a base case, and a bear case on Palantir, and it was not good. The bear case was really ugly. The base case basically didn't have me making any money for the next several years, and the only way I can make money is a bull case. That means Palantir at 200 plus is not an attractive stock, right? Now, of course, you can always be wrong on these, and that's the cost of doing business, but more than likely, if you understand a business well, you run your projections, you're going to likely end up being right in the end. And so a stock like Palantir, it proved to be a great buy 3 years ago when it was a $6, $7, $8 stock, right? And I think it will prove to, at 200 plus to not be a very good buy for the next 3 or 4 years, essentially, right? And so those projections can save you a lot of stress, a lot of time, and a lot of money by actually running them, okay? Huge, huge help to becoming a much better investor. Number 3 subject up here, the number 1 stock I will buy between now and the end of 2025. Okay, so first off, let me show you my possible buys watch list for the stocks that I'm looking to buy, okay? And then we'll get into that stock. Here it is. Meta. Meta's a steal deal right now, no doubt about it. American Express, I just showed you the projections on Amex, right? The thing with Meta is Meta's going to go through a little weird time because our earnings per share might not go up a ton in 26, 27 because of the depreciation situation, but the revenue growth is so strong that I think people are going to come flooding back to Meta because they're going to realize, oh my gosh, this is big revenue growth times. And at the end of the day, their operating income should skyrocket, their operating cash flow should skyrocket. Remember, depreciation is a non-cash expense. So that's something to keep in mind there. Okay, so people might end up looking back by that over time, and especially with the revenue growth coming in the way it is. American Express, we talked about that one. I just showed you the numbers there. Adobe is a huge buy. We might get into that one very in depth here in just a moment. Okay, American Express, Amazon, always been a major CapEx spender. It remains the same. At the end of the day, AWS growth is starting to go up. We just reached 20% in the recent quarter from 17%. It looks like AWS is on the right path there. And then we know the e-commerce business is a beast, and we know the advertising business is just a profit machine, right? Salesforce, I love Salesforce here. That's another one I think is a great buy right now. RH is one I'm looking at potentially in 2026. If they come in with bad earnings, I wouldn't be surprised if that stock gets hit. Keep in mind, if December is a little shaky and ugly in the market, RH is likely going to get hit heavy. You could see that stock go all the way down 125, maybe even approach the $100 level. Estee Lauder, that one continues to be a great buy long term. I think that's a $300 stock. So the fact that it's still under 100, I love that one. Whirlpool, that one, I would love to start a position in 26. The problem is it's already started to run. It's a little frustrating to me. I expect appliance sales to pick up a bit in 26 versus 25, and then a big pickup in 27, 28 as you get people moving again and those sorts of things. No one's been moving for years now at this point in time. I think the real estate market starts to come back to life in 26 and then really starts to come back to life in 27, 28 as you get mortgage rates lower, right? Now, of course, if inflation came back huge again or something like that, then, the real estate market could die again. But I don't have expectations of sky high inflation coming back again, essentially. Okay. Elf Beauty, this is one that remains a great buy at this point in time, $200+ stock long term. Nike, huge buy. The business has already turned around. And the great thing is with Nike, if we've been in a rolling recession, you should continue to see Nike numbers get better and better as 2026 rolls around, and then get much, much better in 27, 28. More stocks. PayPal. PayPal is a phenomenal buy. I have projections on PayPal, and it says it's a screaming buy right now. Kava. If this one is a tax loss harvesting candidate, so it's seen a lot of momentum this week, but don't count on that momentum necessarily lasting in Kava. There's still a lot of people likely sitting on huge losses. Almost everybody that's bought this stock has lost money on this stock, right? And so keep in mind, if there's a stock that could sell off again next week, and let's just call it for the remainder of December, it could be Kava. That one, I would love to pick it up around $40, or if it went into the 30s, that would be so ideal. Cake, that one continues to be a great buy. And so that one I just continue to buy. I bought Cake for several years in a row now at this point in time. It's been a money maker for me, but I think the money has been small compared to what the money will be over the next few years. Celsius Holdings remains a buy in my personal opinion. Bath and Body Works remains, that's one I would love to start a position in 2026. That one could see tax loss harvesting and had a nice bounce this week, but keep in mind, don't get too confident in some of these moves here. Fubo, another one I'm looking at there. I can't believe Fubo's $3. Come on, man. That's crazy. Honest, $2 Chuck. That's wild. Absolutely wild. So as far as the stock I'm most excited to buy through year end, it is ADBE, Adobe. This stock is down about 30% in the past 5 years. I've come to the conclusion this is best risk reward in the market. It's the best risk reward in the market, bar none, and certainly the best risk reward in big tech. And that does include my almighty Meta. That does include even Amazing's on. This is the best risk reward in the market I can find in terms of chances I lose money on this, over the next 3 years versus, let's call it a double up or more over the next 3 years. It definitely favors me in my personal opinion. Okay. The beautiful thing with Adobe is, I think the most underrated thing with Adobe is this business has an incredible moat around it. I mean, an absolutely incredible moat around it. And you got to understand, once people are locked into that Adobe ecosystem, they really can't leave, especially when it comes to big companies. And it's such a small part of their budget, it doesn't make sense for large companies to go swap out Adobe for anything else because of the whole product suite they have and the collaboration tools and all those sorts of things. So Adobe is the standard in the industry. And at the end of the day, big companies have to stay signed up for Adobe. No different than they have to stay signed up for Microsoft, right? Better tools can come out here or there to compete against Microsoft, but at the end of the day, every large company out there, mid-business, small business, pretty much has to be signed up for Microsoft products. Very similar phenomenon when it comes to Adobe, essentially, right? A gentleman named Arya did a phenomenal video. I actually shared this with my private stock group. He did a phenomenal video on Adobe. It was like a 40-minute plus video, why Adobe is impossible to disrupt, just running into that subject alone, and what a phenomenal video that was. He also did a part 2. It was like a 30-minute plus video, but if you really want to dive down the rabbit hole in regards to this subject, watch that video there, because he really goes down the rabbit hole and you'll walk away like, yeah, man, like Adobe is really like near impossible to disrupt, essentially, right? Now, it's interesting because I was just testing, obviously there's so much hype around Gemini right now and their model being the best and Nano Banana and all these sorts of things, right? So I was just like, wanted to test, like, I need a picture. And so I said, I need a picture of a massive mansion with a moat around it and the words Adobe in the middle. And I was expecting this beautiful mansion, right? And there's like a moat around it and water surrounded and whatnot, right? And so it gives me this like dark, decrepit, like this doesn't even look like a mansion. Like I don't even know what it is. Like what the crap is this? But I'm like, whatever. I said, make the photo sunny and happy feeling. So it does that for me, right? And once again, what kind of mansion is this? What is this? And this doesn't even look like a moat around it. It doesn't even look like a moat around it. Like that, I'm just like, whatever, okay? I said, put security guards and suits all around the property. Look at what it does. You flip my flapjacks, it puts like 1 billion security guards. Like I'm expecting it to put like one here, like one here, one here, one here, one here, like, like 6, 8, maybe 10 security guards around the property, and it puts like 1 billion. I'm like, how garbage is this? Like, how garbage is this? Like, I mean, it's cool, like other people are impressed by this, but I'm like, if you're creative or if you're really into photography, videography, these sorts of things, it's just awful, man. I said, and I've tried these other products as well. I've tried ChatGPT and Grok, and oh my gosh, they're all just brutal. I said, less security guards. That was overkill. Here's what it gives me back. Dude, is this not still overkill? Like, what are you doing here? I said, like 10 to 15 security guards total. Such a simple prompt. You'd be like, this is so simple. You can't screw this up. Just put like 10 to 15 security guards around the property. And look what it gives me back. Can you guys count how many security guards are here? Last time I checked, it's like 100. Okay, come on. Like, what are we talking about here? And people think like Pepsi is going to cancel their Adobe subscription for the Super Bowl commercial because they're going to be disrupted by all these other products. Like, come on, man. What are we talking about here? Okay. Now, when it comes to Adobe, this company is way too cheap. 17 forward P. Next year, earnings per share growth of likely strong double digits. Next year, revenue growth of double digits, right? They're also partnering with all these AI companies. So yeah, that company, I'm going to be buying that heavy for the remainder of this year, maybe into early 2026. Once again, for everybody that'll be celebrating tomorrow, happy Thanksgiving, and enjoy the Black Friday sale on 1000X. That will be the pinned comment down there. It's coming shortly, folks. Enjoy that. Much love and have a great day. We'll send you your Steel membership card, baby. 1000X. Oh yeah. AMD. People are in panic. And when I say people, I'm talking about Wall Streeters are in panic in regards to AMD stock right now. We'll speak about AMD stock. What's going on here? Is this time to really be scared? NVIDIA has a lot of concern as well. So I want to speak about AMD at the top of this video. Then we'll speak about some other stocks in this video as well. We'll just do some stock talk, let's call it, and what's going on here, my projections for AMD, all that good stuff, okay? From there, I want to react to 2 videos in this one here today. Alphabet, Google McDougal nears a $4 trillion market cap. What a comeback it has been for Google, good old Google McDougal, right? So I want to speak about that, my opinion there. Is it still time to buy Google, hold? Is this time to start selling? Those sorts of things, okay? Then I'm looking forward to getting in this one. Morgan Stanley's Mike Wilson. He's bullish on stocks for 2026, talking about S&P to 7,800. Ladies and gentlemen, 7,800. So looking forward to reacting to that, share my opinions and perspectives. Got a lot to go through in this one here today. One thing only I need from you guys. If you could please just smash that like button, hit that little thumbs up icon. That would be amazing. That would be absolutely amazing. That's all I need from you. If you want to be subscribed here to the channel, you can certainly subscribe. And we are running out of time, folks. We're only 2 days away from the massive Black Friday sale we're going to have on 1000xstocks.com. Pinned comment down there. Click on that. Fill out the little name, email, and if you want to receive the deal via text because you know your inbox is going to be flooded with crap over the next few days because of Black Friday, then put in your phone number. We'll send it over via text. Keep in mind, I will not be recording a video on Thanksgiving. I'm going to be spending that time with my family. And the deal launches Thanksgiving night. We're going to send out the email with the deal included and everything Thanksgiving night. So if you want the deal, make sure you enter in your info now, and we'll be able to go ahead and send that over to you. That's full access to the entire suite of everything with 1000xstocks.com. Okay. Alrighty. So let's get rolling here. AMD. What are my thoughts right off the bat? Let's just talk AMD. Okay. Listen. AMD is a huge buy. This is so silly. This is ridiculous. This is preposterous. The fact that AMD is selling off today, laughable. Laughable. So what happened here is Meta, right? Meta's supposedly might spend a few $billions with Google for some of their chips for certain workloads, okay, in 2027. Now, everybody's freaking out. Oh my gosh, does this mean they're not going to buy AMD chips? They're not going to buy NVIDIA chips? Did you just wake up yesterday? This shows me how little people understand about this industry, the chip cycles, or anything like that, okay? You have custom chips that are good for certain situations, okay? For certain workloads. This is a huge industry. Ask Broadcom. Broadcom's one of the biggest companies in the world, and they can help companies make custom chips that are great for certain workloads. This is a huge industry, a huge, area of the chip space, okay? Then you have companies like NVIDIA, companies like AMD that make the top of the line chips that are for the most intense workloads that you're getting the best you can possibly get in the world at that particular time, right? In certain companies, businesses, they like to use those best of the best chips for their specific workloads, okay? So the fact that my company, Meta, is going to potentially spend some money with another one of my companies, Google, is great news. What does it mean for AMD? Absolutely nothing. So what does it mean for another one of my companies, AMD? Nothing. Absolutely nothing. Let's say Meta spends, let's just throw it out there. Let's say they spend $4 billion on chips with Google in 2027, okay? Based upon how Meta's CapEx is increasing, I wouldn't be surprised if Meta spends $100 billion plus on CapEx in 2027. So let's say they buy $4 billion of chips from Google, okay? But still leaves them $90 billion plus of CapEx to be spending with companies like NVIDIA, companies like AMD. So the fact that people are like, oh, means doom and gloom for AMD is just ridiculous. It's just people don't understand like the industry. I even saw, this is so silly. I even saw today, might be the most silliest part. TSMC, I believe, was down big today. And I'm like, TSMC? Like, do they realize all these chips get made at TSMC? Like, this has no ramifications negative for them. Like, this is crazy. Absolutely crazy. So let me show you my projections for AMD stock over the next few years here and show you why the stock is such a buy today, okay? And then we'll talk about other stocks before we start reacting to videos, okay? So, you ready to see these projections? Here they are. These projections are run on 1000xstocks.com. This is the software we're going to have the massive deal on. This is software I use on a daily basis, okay? So one of the things we have is we have intermediate projections and we have advanced projections, okay? Advanced goes really in depth when you're really looking to get crazy with it, okay? So my AMD bull case, here it is. My AMD bull case has been doing 40% revenue growth per year on average 2026 to 2029. Lisa Su's talked about over the next 3 to 5 years, averaging 35% growth. Lisa Su tends to sandbag, so my bull case basically has things being a little better than what Lisa Su's saying they're going to be, okay? And then do net income growth at 50%. They should get a nice margin uplift as their revenue continues to grow, right? And also keep in mind they're selling a lot of high-end chips now. And will be certainly with the 450 series that starts to go into production in the back half of 2026. So you should get a nice margin uplift, but still, I don't have their net income margins going that crazy in this scenario. I have the net income margins only going to 19%. That's not a super high number at all. NVIDIA has been putting up net margins like, closer to that 50% level. So there's, we're not even remotely close to NVIDIA levels in regards to margins. So keep in mind, this number, 19%, could end up being really low. They might be able to push those net income margins to 25 or 30%, which completely would change this bull case into even much more of a bull case, okay? Now, if they're growing at those sorts of growth rates, 55 to 75 PE is very fair for a company with those sorts of growth rates. You can say it's even undervalued significantly. And this puts a stock, right around $1,000 stock come 2029. Right now, it's trading for less than $200 a share. Base case for AMD. This is just a fancy way of saying this is what I expect to happen with maybe a little conservatism in it, okay? So basically I have them doing what Lisa Su's talked about doing, about 35% revenue growth per year over the next 4 years, okay? Net income growth of 45%. Once again, net income margin's only getting to 19%. So I think the thing I'm most conservative with is the net income margins. Because I actually believe there's a good possibility they'll push into that 25% net income margins by 2029, but I want to be more conservative, so I have them only going to 19%. Now, if you've got a company growing 35 to 45%, top line, bottom line, I mean, honestly, you could command a P easily in the 50s, if not the 70s to 90s. But I like to be a little conservative, so I wanted to price them lower because people might think like the chip cycle's over come 2029, all those sorts of things. So I have them only at a 40 to 50 PE, right? Which is really low considering if they're putting up those sorts of growth rates year after year. And that puts a stock somewhere between, you can call it low 500s to high $600 a share. And right now it's less than $200 a share. It's an incredible return profile over the next number of years. We're talking compounded annual growth rate in the 30s, ladies and gentlemen, okay? My base case, this would be if things went really bad for AMD, only 20% revenue growth, which isn't even close to what Lisa Su's talking about the company will be doing over the coming years. Net income growth of only 25%, net income margins embarrassing 17% number come 2029, 25 to 30p, no one wants to pay for it. And basically, I don't make any money, I don't lose any money on the stock over the next 4 years. I think there's a very low probability this happens. I would call this bear case way less than 10%. I'd call it less than a 5% probability that bear case plays out, but it always is a possibility, right? And basically, AMD would just be a money suck for the next several years, and I wouldn't make any money on the stock, right? My base case, I think something like this is, I would put this at probably about a 70 to 75% probability they'll come in somewhere in here, and basically you'll see the stock, 3 or 4 years from now at price anywhere between $500 and $700. I think that's a very high probability. And the bull case, I think there's a much higher probability this plays out than the bear case plays out. We can call that about a 20% probability or somewhere in there roughly in regards to this bull case scenario, right? Because this bull case only has him doing a little better than what Lisa Su's talking about. She usually sandbags. And net income margin's not even getting to 20%. What happens if those net income margins get to 25%, let's say, for instance? We would have to do, I think, net income growth of 65% here, all right? So now we get to net income margins of 28%. So we're a little high. Let's tame it down a bit. We'll take it to 60% net income growth per year for the company here. There's a beautiful thing about 1000X. You can run all these numbers and projections in a matter of seconds. So in this scenario, there we go. We're at a 25% net income margins, which isn't crazy to assume they could get to 25% net income margins come 2029. And then we're talking about this stock somewhere priced between $1,100 and $1,500 a share. And right now it's less than $200 a share. AMD's a buy. Now, what about me personally before we start talking about other stocks? Am I buying AMD today? I really want to. I want to so bad. I haven't yet. Here's why. I have over 7 figures invested into AMD stock. I'm sitting on massive gains on this stock, right? The massive gains part, I don't really care about. I don't mind. I've matured as an investor. I don't mind buying a stock I'm up huge on, right? Which I'm up multi 6 figures on AMD position, right? But I have over 7 figures invested into it. And although it's a screaming buy today, the thing is, what if I'm wrong? That's something you always have. It doesn't matter how much experience you have in the market. It doesn't matter how much success you have. It doesn't matter how many millions of dollars you made in the market. You still got to factor in what if I'm wrong, right? And for me to put more money in it when I already have 7 figures plus invested into it is a tough decision. So it's brutal. I'm looking at it today and I'm like, oh my gosh, this is such a screaming buy. It's under $200 a share. This is silly. This is nonsense. But the other side is me is like, I have so much invested in the stock already. I put even more money invested into it. What if I'm wrong? What if they don't grow the way Lisa Su's talking about, the way I think they're going to grow? What does that mean? What if there's a massive recession? What if this happens? What if that happens? Running through all these scenarios, right? And so the moral of the story is, all this is a great buying opportunity for people that are under invested into AMD or haven't invested yet. That's the way I would look at it. Man, I want to buy it so bad. I want to buy more shares, right? Because I wouldn't be surprised if, 6 months from now, I wouldn't be surprised if AMD's, $300 plus, if not $350. You know what I mean? These things change on a whim like that. Everybody's bearish on it at this particular moment, and next thing you know, everybody goes bullish on it. And so we'll see. I mean, Meta, I'm looking at Meta. I think Meta's $1,000 stock next year. I think Meta's $1,000 stock in 2026. I understand all the depreciation. That's kind of something that's going to weigh on it. But Meta's revenue growth, at the end of the day, people are going to come flooding to Meta. If they keep putting up these sorts of revenue growth, the latest quarter, they grew revenue 26%. If Meta keeps putting up these sorts of, 25% plus revenue numbers, there's no way people are going to be able to stay away from Meta stock. And when I say people, I'm talking the Wall Streeters. They're going to have to flood into this baby. They're going to have to. There's no way they're going to be able to avoid that. Let's go ahead and take a look at some other stocks out there here today. So this is my current stocks and positions. Revolve's my best stock here today. Russell's really pushing up. Now, here's the thing with the Russell, okay? Look at Cake. Cake's coming back strong. Here's the thing, okay? I got to warn everybody here. Listen. Right now, we're in Thanksgiving week, okay? A lot of Wall Streeters kind of take off this week. So what drives a lot of the market during this particular week can be retail investors, average Joes, you and me, okay? And additionally, the other thing that can drive it, it's not individuals, it's algorithms, okay? So that's like the news today is so stupid in regards to AMD, the fact that stock sold off huge, but it's not like humans all selling out of it. It's a lot of it's just, Wall Streeters basically have these programs that so much of the trading's now done by machines, essentially, okay? And if a stock has a certain amount of bad news or a piece of bad news, it will automatically sell the position. If the stock goes to this sort of level or this sort of technical gets hit, boom, stock sold immediately. That selling leads to more selling. That's how you get a silly sell-off in a stock like AMD today. That makes no sense at all, right? And don't be surprised if AMD stock gets bought right back up next week when the Wall Streeters return, okay? Just keep that in mind. And so, the Russell moving up huge right now and a lot of these stocks running, I think a lot of that has to do with retail driving the market right now and the algos also sensing that, and the small cap stocks move up, right? And so that's my 2 cents in regards to that matter, right? And that's why you're seeing stocks like Revolve, stocks like Celsius, stocks like Cake move up pretty significantly. Meta's a great bounce here today, 3+%. Meta's been an extreme sell-off. It's ridiculous. That stock should be $1,000 plus next year. Bottom line in regards to that. CRM bouncing nice. As far as stocks that are down, EL down a bit, but that stock's ran a lot. That stock has ran a lot, man. Look at a 6 month on EL. It's up 37%. So, even AMD, I understand there's a big drop on AMD, but look at the 6 month chart in AMD. 78% or 74% gainer. That's run a long dang way. Now, on the flip side, something like Meta has been dead for the last 6 months. No gains in Meta for the last 6 months. That will change. Wynn Resorts has been one of the most underrated stocks in the market, up 36% over the past 6 months. Very underrated stock. They are putting up great numbers regardless of the environment. They cater to the high-end consumer. The high-end consumer always has money. That's what I try to explain to individuals in regards to Wynn Resorts. Rich people always have money, right? Doesn't matter. Like, you got a $75 million net worth and the market goes down a bunch and your net worth goes down to $50 million. Guess what? You still have $50 million, and that's plenty to go spend 6 figures, 7 figures at the Wynn on a fun weekend, right? And so, Wynn's it's just a beautiful business model, and there's starting to be more and more excitement building, and you got to keep this in mind in regards to 26 for Wynn. There's going to be a lot of excitement coming for Wynn. Do you know why? Well, it's not in Dubai, it's outside of Dubai, but the property in the Middle East is expected to open in 27. So that's a huge untapped opportunity. It's the biggest opportunity we've likely seen in an international market since Marina Bay Sands opened for Las Vegas Sands in Singapore. And that was back that was 15 years ago now or something like that. It was a long, long time ago Marina Bay Sands opened. This is the biggest opportunity we've seen since then. There's nothing like this exists in the Middle East right now in terms of a gaming resort that's super high end. Nothing like this exists. It's going to be the place to be in the Middle East. And people think, people aren't going to gamble in the Middle East. Come on. Did you wake up yesterday? You think because of religious beliefs, people aren't going to go gambling? Do you know the type of stuff that goes on in the Middle East? I don't think you guys know what goes on in the Middle East, okay? That's got to be one of the silliest things. Do you know how many rich people are filthy rich in the Middle East are going to be going to the Wynn to have some activities? Let's just call it that. Oh, boy. So there's going to be a lot of excitement that builds in 26 in regards to that. And I wouldn't be surprised if the stock moved up considerably as you get closer and closer to that opportunity opening, right? And then I've seen this before, even when they opened Wynn Palace, the stock was running heavy before and then actually sold off after the property opened. So, if that happens, that happens. Like, we'll see what transpires there. But Asia also looks good. So Wynn continues to be a great performer. Let's pull up my possible buys watch list here. Okay, look at this. So some of this, I don't like the activity. Bath & Body Works running big. I don't like that. I hope that sells off again before year end. RH, I don't like that. I hope that sells off again before year end. Celsius Cake, same exact thing. I don't actually like those stocks running right now because I'm not planning on selling Celsius or Cake anytime soon. Like, I could hold those stocks for years. So if anything, I want them lower right now. I actually don't like those stocks running right now. Whirlpool, I would like to see that one down more, right? Kava. Yeah, that one, I really want to see that one go down to about that $40 level, or maybe even break 40 and go into the 30s. If that happens, I'll definitely step in and start buying Kava stock. So yeah, alrighty, let's go ahead and react to some videos here.
Investment Committee, as always. Joining me for the hour today, Joe Terranova, Stephanie Lake, Brian Belsky, and Josh Brown. We will check the markets. It is a Dow and small cap kind of day. NASDAQ is basically flat, but I'm telling you, the biggest story continues to be this move in Alphabet, which is why we're leading with it again today. Got to $3.98 trillion in market cap, pre-market. It needs today to get to $331.48 to hit $4 trillion in market cap. Joe, I just asked our executive producer, Kevin, this stock has added $2 trillion in market cap since the Eddie Q sell-off 6 months ago. Now, I know NVIDIA has had some unbelievable...
What did I just tell you guys? The opinions on the market, on stocks, can change so quickly. He just mentioned $2 trillion of market cap added in the last 6 months. Look at how fast that sentiment shifted from so bearish, so negative about everything Google related to just like everything is positive now in regards to Google. Like, it can change so quick, man. $2 trillion in 6 months?
$2 trillion in market cap added to this name in 6 months. That's unbelievable.
It's staggering, and if you think of what I keep talking towards, which is the return on investment related to AI.
Cheers, Google investors.
This was probably the one Mag 7 name where you had the least confidence coming into 2025 that they actually would do what they're doing now, which is potentially have that strongest ROI on the AI spend. So that dramatic reversal in sentiment is remarkable. It's a credit to Sundar Pichai's strategy of a full stack approach. And now we're hearing about these tensor processing units, which have really been in place for the better part of the last 12 years. Google has been developing them for quite a long time. But what does that allow them to do? Okay, you don't have standing in front of you the regulatory concerns that we had at the beginning of the year. They introduced Gemini 3, which is being widely applauded. And there you go, okay, we're able to defend against OpenAI. And now the unthinkable. They actually have the ability to challenge NVIDIA's GPU chips.
Oh, I thought you were going to say the unthinkable that Berkshire added a stock like that.
$4.9 billion. Yeah,
by the way, but it's up 16%. Okay, since that was revealed on November 17th. So you got the equivalent of the Good Housekeeping seal of approval from Berkshire Hathaway on Alphabet, and this stock has just been a freight train ever since. Brian, you own it as well. I just don't know that we've seen anything quite like this.
Now, you might say, why is it such a big deal that Berkshire, bought a big position into Google, right? You might think, okay, it's a Warren Buffett and Berkshire seal of approval. It means it's a great stock. Everybody knows Google's a great stock. That's not what's going on here, ladies and gentlemen. Something bigger. When Berkshire buys a position into a stock, any sort of bigger position, right? Usually they hold that position for years. And so what this basically does is it takes a massive amount of shares out of traders' hands and into what you would call strong hands. Now at this point in time, not the ones that will likely sell at any, because Google has some bad number or some rumor came out about blah, 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 or Meta's not going to buy Google's chips after all, right? And then, the stock goes down. Berkshire is not tripping about any of that. Berkshire's usually, they're going to hold for years, like they did their Apple position. They held that Apple position for 8-9 years before they started to sell out of it. So you basically have a strong hands, take a massive amount of shares off the market. Then if you can get Google also to buy a bunch of shares back as well, okay, now we're really talking here, right? So that's why the Berkshire situation matters so significantly.
No, I was trying to go through the math too when you were talking to Kevin in terms of the $2 trillion ad. We were very fortunate in April during the depths to double our position in Google just because we did not believe in the demise of Google due to ChatGPT and OpenAI. And you got to take a big picture, think about this as well. Now, with what's going on in terms of its potential business with Meta. Remember earlier in the year, they talked about joint ventures and more work with Apple. These are really, really big strategic decisions that were brought on by some of their founders that came back into the business and helped them really derive where they're going in the next several years. And by far, it's our largest overweight in the Mag 7, number one. By far, it's our largest overweight in communication services. And then back to Berkshire, if you take a look at the cash positions alone.
Yeah, I do remember Sergey Brin and Larry Page, they were doing some work at Google. This is like probably 2 years ago now at this point in time. But from my understanding, they actually got very involved with Google again.
Google is not only managing those, but investing that. And then per Joe's point, in terms of the return on invested capital, those two things are major things that Berkshire has always looked at.
I'm old enough to remember when Steph sold Google, right, and bought Meta. Remember?
Yes.
Remember?
Yes.
Now I'm wondering if we're going to have a reversal. You going to sell Meta and buy Google?
Are you nuts? Are you
I don't know.
absolutely nuts?
I mean, look at the direction of these stocks.
No way.
Put up Meta.
Yeah.
Take a look. Put up Meta versus Alphabet, actually, over the last 6 months. Let's just look at that for the sake of the conversation. Because I'm just bringing it up.
Of course.
Because, Meta, everybody was all bulled up on Meta after their worst year ever. Then they had their best year ever. And now I think we have a much more idiosyncratic picture as it relates to the hyperscalers, who is perceived to be well ahead of the pack, who has more questions about it, and where 6 months...
This Meta situation with Google over the last 6 months, this is the ultimate proof of don't try to think you're too smart in this game. At the end of the day, if there's a stock that's very undervalued, you buy that stock. Even if it doesn't have the hype at that particular time. If you believe the fundamentals of the business are going in the right direction, if you believe the stock's undervalued based upon running your projections on 1000xstocks.com, you make that decision. Meta had a lot of hype if we go back 6 months ago, right? A lot of excitement, even a few months ago, right? And now there's no hype around Meta. So you say, well, maybe I should jump on the Google train, get off the Meta train because, Google has a hype. Meta doesn't have the hype. No. If you think Meta's a great value right now, which it is, by the way, you buy Meta stock and you hold it and you buy more. And you play that game from the long-term perspective, and you don't try to play this game about what's got hype, what doesn't have hype. Maybe this one's going to have the hype in 6 months versus this one. No. Worry about where these companies are going over the next 3-5 years. You do that, you're right about your projections, or anywhere close to your projection, you should do very well over the coming years. Okay? And so, this is just the ultimate proof. Don't try to play that game, man. It's a silly game to play, and it's a losing game to play.
So, Alphabet seemed to have all the questions about it. We are asking those questions of Meta now.
So we're supposed to buy low and sell high. So those guys that actually bought more Google, Alphabet, congratulations to both of you. I think Josh also owns it, so congratulations. That's great. But I think that there's tremendous value in Meta, especially after the 21% correction, especially since the earnings estimates actually went higher despite the concerns about higher expenses. So it's now trading at 17 times forward estimates. I've been adding to it on the decline because they are seeing the ROI, just like you just mentioned, in a different way. They're seeing better double-digit impression growth, 14% because of AI. They're seeing time spent increase 5% because of AI. And they're getting pricing power. And oh, by the way, they have a $31 billion buyback program, which I'm sure they're in there down here. At least I'm hopeful. And I do like that they are using Broadcom's custom chips. They might use speculation. They might use Google's custom chips. They're setting themselves up to be in the game, and no one's given them credit because they don't have a cloud business. That to me is crazy speak. And so I think we're going to make a lot of money in Meta over time. Just have to be patient because I don't see a near-term catalyst, but the stock is awfully cheap for the growth that you're getting. By the way, 20% earnings growth, 26% revenue growth. That's pretty impressive.
That's the problem, I guess, Josh, is what Steph just said. At least it relates to Meta. I don't see a near-term catalyst because all of these other names seem to have near-term catalysts, and they're capitalizing on them, like Google, Alphabet, which according to the information now, Meta is considering spending billions of dollars on Google's TPUs. They currently rely on NVIDIA's GPUs. So this is another near-term catalyst for this name, that name being Alphabet, which you don't own, by the way.
Hold your horses for one flip and flapjacking moment. Wait a minute, ladies and gentlemen. Near-term catalyst in regards to Meta. Did we forget? Meta has the best revenue growth out of everybody in the Mag 7 outside of NVIDIA? And not only that, by a large margin. I mean, we're talking about Meta's growing their revenue at almost a double up clip of Google in regards to percentage. So if you want the big revenue growth, you go to Meta. Do you like big revenue growth? Well, go to Meta. And so that's why I don't believe this sell-off in Meta is justified. I don't believe this sell-off in Meta is staying, because at the end of the day, what does Wall Street love? What do these folks love? They love the big revenue growth. And if you want the big revenue growth outside of NVIDIA, because I understand a lot of people are scared about NVIDIA and the chip cycle and maybe 26 is as good as it gets and all those sorts of things. If you want the big revenue growth and that's sustainable, you go to Meta. And so let's not act like there's nothing going on short term for Meta. That's pretty darn exciting.
Yeah, well, the whole world owns Alphabet. It's like the fourth largest company in every major index. So the question is, are you overweight Alphabet or not? And I screwed up with this name. I sold it closer to 200, and I did believe that ChatGPT usage and Claude and a lot of enterprise AI products would be a threat to search. And I think they still might be, but that doesn't matter, because what Google has done beautifully is respond to the challenge around its core business with new product, and that new product is working. And it's not just Gemini 3. Yesterday I was on the show, we talked about Nano Banana, which is their answer to Sora. Like, they're gonna have best-in-class products in every major category of AI, and we weren't sure that that would be the case as recently as 6 to 9 months ago. So for the people who made the bet that they would, those people are getting paid right now. I think the lesson, though, for me and for everybody else, is how easily a narrative can form based on share price action, whether it's up or down, and then how quickly that narrative could not just fade away, but completely reverse. Think about the storylines that we've seen this year around AI that have come, gone, and then completely went the other direction. In the early going, Meta was the most aggressive in AI. They were hiring engineers and paying people billion-dollar salaries vis-a-vis acquisitions of startups. It really looked like they were off to a running start and everyone else was still sleeping. Now, Meta's in this bucket where nobody's really sure about whether or not their AI strategy beyond monetizing Reels will be good. Same with Apple. They're not spending enough. Why aren't they doing anything? Why don't they buy Perplexity? Wah! Now the narrative is, look, they didn't spend too much. They didn't get themselves into off-balance sheet debt deals with Blue Owl. They didn't do any of that stuff. New all-time high. So I don't know what the narrative will be on Meta 6 months from now. It could be the polar opposite. People could look at them and say, thank God they don't have a cloud business where they're spending all this money to facilitate other people's AI. Thank God they could just focus on their own business. So I don't think that we want to just look at the last month of Alphabet and Meta and Microsoft and draw these like hard and fast conclusions about what might happen in 26, because you could just flip the deck of cards in the air and pick up the cards in a different order and things could look very different.
Sure.
So there's a big I think, lesson in regards to this whole situation, in regards to Google, in regards to Meta, in regards to these stocks. And I think everybody listening to this right now, you want to take this away from this before, Mike Wilson in his call and we start talking about the market in general and where that's headed, okay? So listen, people do not respect these big tech companies enough. They don't give them enough credit, is what I've continuously seen. So the narrative a few years ago with Meta was, oh boy, like TikTok's eating Meta's lunch. Like, I don't know, people aren't going to use Meta's products like Facebook and Instagram because they're all using TikTok. And like, that was a big thing that was talked about on Wall Street, right? And TikTok's plenty successful. Meta's just a lot more successful, right? So now we go back 6 months ago, 9 months ago, 12 months ago. Google, ChatGPT, no one's going to use Google search, all these sorts of things, right? And just totally just like disrespecting everything like Google's built and what they're building and all those sorts of things and just running these crazy conclusions that, it's just wild. Like they just run to these conclusions. And, look at today, the AMD sell-off. Oh my gosh, running to conclusions like, oh, no one's going to buy AMD chips because they're all going to buy Google chips, I guess. Like, what? Because Meta's considering potentially buying a couple $1 billion worth of Google chips for some of their workloads. So because of that, no one's going to buy AMD chips. Like, what are we doing here? But that's the market. And everybody just, and that once again, it's the algos. But this is the biggest advantage. We have the biggest advantage as long-term investors who think practically about these matters. We have the biggest advantage of ever in history because we're able to see all this developing and we're able to look at it and be like, this is kind of silly. Like everybody's freaking out over this. Like, and these sell-offs are way more extreme. Like Meta going down to $88 in 2022, that should have never happened. If Meta went down to 200, I get it. If it went down to 180, okay. $88? The stock went down 60% more than it should have. 60%. Should have went down to maybe 180 to 200. The fact that it went down to 88 is just silly, right? It's just ridiculous. Like maybe Meta could have went down to 220. That's fine. But 88? And so these sell-offs are way more extreme than they should be, right? I could understand if like AMD, for instance, I could understand if AMD was flat today, right? Let's say the market was up, AMD's flat because, Meta might buy a few $1 billion Google, so people just... But the fact that it's down 7%, going under $200 a share, that's silly. Same thing with NVIDIA. The fact that NVIDIA is down that much, it's also silly, right? AMD's just more silly. And so, like, people are just crazy. Now, by the way, in regards to Apple... Listen, the reason Apple's going up right now has nothing to do with, the fact that they haven't spent as much on AI and people are happy that they're not spending as much. No. It's nothing to do with that. The reason Apple stock is going up right now is they have banger iPhones in the market. The iPhone 17 models are selling very well. I bought both of them. I bought the Pro Max 17, whatever it's called, and I also bought the Air as my backup phone. They're both sick. And it's the best iPhone cycle Apple's had in a long time. Long time. And so that's why Apple stock's going up because the iPhone numbers are great. Did you see the numbers of the latest quarter? We'll just wait till next quarter. And they're going to have banger numbers. So the iPhone business is hot again. How long it will remain hot? Who knows? Maybe another 6-12 months. But for right now, the iPhone cycle is red hot. And so Apple's going to put up great numbers for basically the rest of, let's call it, I would say for at least the next 2 to 4 quarters, Apple numbers are going to be great. They're going to show great growth rates. And that's why Apple stock's actually going up right now. And that had nothing to do with, the fact that they didn't spend as much, blah, blah, blah. No.
Only releasing their outlook for 2026, writing, we raise our S&P 500 price target to 7,800, driven by strong earnings growth. We believe that we're in the midst of a new bull market and earnings cycle, especially for many of the lagging areas. Mike Wilson of Morgan Stanley joins now. Wonderful to see you, Mike.
Thanks, Lisa.
So let's start on the optimism. You have been optimistic for quite a while, talking about the rotation into the adopters, not just the AI tech behemoths. Why are you getting even more optimistic as the year goes on?
Well, I would say it's just a changing, it's an evolving narrative we've had, which is that we think that, the policy is still misunderstood, right? That they essentially came in this year, did the growth negative stuff first, and now we're looking at the growth positive stuff. I'm not worried about the economy. What I am a little bit worried about is that the Fed is kind of dragging its feet. So I would agree with Neil's comment, like the Fed needs to cut, but not to save the economy, but to see the full rotation into these lagging parts of the market, the interest rate sensitive parts of the market, which is really our story for 2028 or 2026. We think the 7,800 is dependent on the earnings cycle broadening out.
So there's a lot to unpack there. I want to start with you agreeing with Neil, because Neil had a pretty negative assessment of the overall economy, saying he suspects the train's already left the station with respect to the pain from the Fed keeping rates where they are for as long as they have, and that we could be looking at a recession. You seem to disagree on that. So where's the nuance here? What's the difference between preventing recession and really allowing the rotation into some of these other names?
Yeah, I mean, I think our view has been differentiated, that we think we have had a recession. We went through a rolling recession in the private economy. So I would agree with Neil that the economy is weak, but it's rebalancing now towards the private economy. I mean, many parts of the economy have been suffering: housing, all the interest rates, durable goods, consumer goods, which have been under pressure, commodity sectors, transportation. There's been no volume going through the economy, no velocity in the real economy. And the way that the administration is changing the policy, in addition to the Fed now cutting hopefully next year, you'll see the private economy now doing much better, the government no longer crowding out these areas that have been under pressure. But we do need to get that trend, that the Fed needs to do more. The Fed needs to cut rates, and they need to probably provide some balance sheet.
So Mike Wilson brings up a fair point here that I can't disagree with, and I'll explain this here, that we have been in a rolling recession for years, right? Where's the proof of that, though? Because you look at the GDP and you're like, it's not really there as far as that proof. I can kind of show you the proof, okay, and take you through how all this plays out and why it might be a fair statement to say we've actually been in a recession for years. In 2026, we might start to actually climb out of that recession, okay? Listen, when you start going through a recessionary period, the thing that usually gets hit first is big ticket purchases. So the first thing that usually starts to get hit are things like home sales, okay? Definitely starting in 2022, we saw home sales start to drop off a cliff, and that has continued for the last several years, okay? That's proof number one. Next thing that starts to drop is auto sales, right? And certainly the auto market over the past number of years has been very weak. That's like the next biggest ticket purchase. Next thing after that you see drop is, I call them big ticket purchases that are, let's call it not as needs based. So like furniture, like, expensive furniture, like from RH. Look at RH sales start to drop off a cliff in 2023, right? And it has continued to drop off over the last few years. I think about like boat sales, ATVs, all those sorts of things all fell off a cliff over the last few years. So that was the next kind of thing to fall off, okay? Then after you get all those big ticket purchases to all fall off a cliff, for one, starting at housing and moving down from there, right? The next thing you see fall is, I would call it small ticket purchases, okay? So what that would be is like Starbucks, Chipotle. Like, I'm not going to go get a, $11 burrito at Chipotle today. I'm going to eat ramen noodles at the house instead. I'm not going to spend $7 on a chai latte from Starbucks. I'll make a coffee at home for 20 cents, okay? So that's the next thing that falls off. And that's usually when you're toward the end of that recessionary cycle, the small ticket purchases. Like, and even before that, you kind of get to that small ticket purchases, but like larger than that. So like, think Nike, right? Think Estee Lauder, EL. So like high-end beauty products that might run $80 to $200 a piece. Nike products that might run $80 to $200. So that was kind of in between, let's call it the small ticket purchases, which has weakened considerably this year, and the big ticket purchases. It was like big ticket purchases first, then smaller big ticket purchases, then let's call it like big small ticket purchases. So like Estee Lauder, Nike, products like that might be, priced between $50 and $500, okay? And the last tier is the Starbucks, the Chipotle, right? The Cava, like I'm not going to Cava today. And that's, if you look at all the sales of those companies, they've all fallen off a cliff, right? Even Texas Roadhouse has had a lot of trouble, and Texas Roadhouse is arguably the most well-run restaurant chain out there. They've had a lot of trouble pushing up those comp store sales if you've been looking at their numbers over this year, right? Cheesecake, same exact thing, like Cheesecake Factory. And so that's the last level that usually gets hit. when you're in a recessionary cycle. So that's gotten hit this year. All those companies, the smallest little ticket purchases. So how this works coming back out is what you should see in 2026. If we're in a recession and we're coming out of the recession, what you should witness in 2026 is small ticket purchases start to trend back up very nicely. So that means in 2026, you start to see Starbucks report some positive comp store sales, Chipotle, Cava gets back on track, Cheesecake Factory posts even better numbers in 26 when it comes to their comp restaurant sales, Texas Roadhouse, right? All those sorts of companies. Additionally, as you get further into 26 and as you go into 2027, you should start to see more and more of the big ticket purchases come back. Think people buying automobiles again, boats, ATVs, stuff like that. And as you push further into 2027, 2028, you should see real estate start to come back strong again. Like people actually moving again, like going to buy homes, stuff like that. So that's how this should play out. There's a strong argument to be made. We've been in a several-year recession that started at real estate first. The biggest ticket purchase went down from there. And then what we should see in 26 is the small stuff starts to come back, right? Then you start to see Nike numbers continue to get better, Estee Lauder numbers continue to get better, those mid-ticket purchases, and then you get into big ticket purchases, 27, 28, and those get better and better and better, okay? And then you get an actual revived economy, and you get to 27 and 28, and suddenly people might actually feel great about the economy again. We'll see, but that's what I'm laying out here that could happen. And maybe in 27, 28, people say like, dang, this economy is banging again. Like real estate's moving, autos are moving, people are doing big ticket purchases, the small ticket purchases are there. Like we just got a great economy again. We'll see. But that's how it can play out. That's how it does play out. And, there's a strong argument to be made. Okay, that was some economics in depth right there, ladies and gentlemen.
Things that Neil talked about was his fear that even if they cut in December, they're not going to lay out a path for continuous cuts. And Fed Governor Waller seemingly enforcing that, speaking on Fox moments ago, saying you might see more of a meeting-by-meeting approach once you get to January. If you do get that posturing from the Fed that maybe they cut in December, but it's a meeting-by-meeting approach, they're not necessarily going to cut in every single one. Is that enough to allow for that rotation, or do you need a clear path of cuts to get it?
No, we need the latter. And I think we're going to get there one of two ways. Either the data, the labor data is going to basically support our view or my view that we had a rate of change trough in the labor markets in April. Okay, and so that data then will allow the Fed to cut more or signal they're going to cut more. The second one is that we get more financial stress. Okay, that's what's been going on. We think the market, we wrote about this back in September, early October. We thought the market was going to have a 10 to 15% correction because the liquidity wasn't there, that the balance sheet was tightening. And we think there's evidence that correction is well advanced. Okay, all the momentum stocks, crypto obviously is the topic of the day, down 30% for Bitcoin. I mean, these things are telling you that the market is worried about this liquidity. So as usual, the markets will dictate the Fed's timing. So if the market really wants, and look, markets are like children, right? They'll have a little temper tantrum, and then the Fed will respond to that. So is this like a mini 2018 in that regard, right? You kind of go into the end of the year, and then there's stress in some of these financial metrics that the Fed cares about, and then they provide more balance sheets. So we think there's a sort of...
Did somebody say 2018?
This tug of war going back and forth, but ultimately it resolves in a more dovish policy path.
On the point of crypto, a lot was made, even from Bill Ackman basically saying things that he thought weren't correlated all of a sudden were, that Fannie and Freddie were selling off because the people who were buying crypto were the same people in those names. Did last week and the week before's episode, given how much crypto falls, show some vulnerability within the market structure, within who owns these stocks and how fragile and weak some of those hands are?
I don't think it's showing anything new. I think this has been there the whole time, right? People waking up to the idea that liquidity is important for the market. Obviously, I don't know what they're doing. That's kind of crazy. Of course liquidity matters. Liquidity is, and especially the last 10 years or so. I think that the hard part about liquidity is it's sort of this sort of nebulous thing. It's hard to measure. And I've spent a lot, like the last 2 or 3 years, trying to develop a better skill set around that. And I think we've got a better handle. But I would say it still is one of these things that's sort of the invisible hand. And so what you have to do is you have to look at the market to tell you when liquidity is tight or not.
So you kept mentioning the balance sheet. Are you saying QE is going to start again?
Well, they may not call it QE, but yeah, the balance sheet needs to expand, not only to support financial markets, but to support the better growth that I think is coming next year, right? So if CapEx really picks up for the first time in 10 years, okay, let's be honest, we haven't seen much capital spending. But the big, beautiful bill is incenting that. That's a usage of capital that needs to be supplied by somebody. So the balance sheet needs to grow just to help the economy and the markets. And so we can call it QE, call it not QE, but generally they need to expand that.
How much is the 7,800 target predicated on the idea of the Fed cutting rates and using its balance sheet to help support liquidity?
It's very important. I mean, I would say if we don't get at least one of those items surprising the markets, meaning more than three.
Alrighty, folks, I got to run. I got to go pick up my Ferrari. Okay, so massive sale coming up here for 1000X. Make sure you click pin comment down there, enter in your info so we can send that over. We're going to have a monthly deal, which is going to be just like 51% off a monthly membership. And we're going to have a 3-year option for people that want to join on a longer time. The 3-year option is going to be 50% off. So do keep that in mind. That will be pinned comment down there. That's for the entire software suite of 1000X, all the way from our search feature where you can just focus in on one stock and all the metrics and where stocks usually trade at for those metrics. We have a compare feature where you take 3 stocks side by side, enter them in, be able to compare them all, which is, oh my gosh, what a time saver. This used to take me an hour to try to compare 3 stocks and all the metrics. Now you can do it in literally seconds. We have our financials. We have our beautiful charts feature, which we continue to add more and more charts. You can put it on a quarterly basis, trailing 12-month basis. Oh, this is so beautiful. It is so beautiful. I'm looking forward to us continuing. And the best part is we just keep adding to it. We have income statements. We have balance sheets. We have our projections, which we have our intermediate projections. You can also save your projections. And then we also have our beautiful, look at this, advanced projections. Oh, if you really want to go crazy with it, you can go crazy with our advanced projections. We have our earnings calls tab where you can listen to conference calls and even put them at 2x, 3x speed, whatever you want to do as far as that goes. Transcripts. We also have AI breakdowns of the oh my God. Sometimes I forget how many things we have. We have our SEC filings all here, so you can just type in a ticker and like pull up their SEC filings. And then we have our metrics. So this goes all into depth on explaining all these different metrics. If you're a little bit more of a beginner investor or, you don't know a lot of that sort of stuff, we have our education portion, which is great for beginner and intermediate investors, right? Oh, look at this. It's just unbelievable. So pin comment down there. Make sure you get that deal. Let's look at the public count here today, up $92,000. But you know what? It feels a little bit like receiving a participation trophy after the downfall the public count has seen over the last month. I mean, a month ago, this public count was over 4 million. So to be at 3.5 and have a great day like today, it kind of feels like, a participation trophy. It's not the real deal Holyfield, right? Now, I was looking at the public count here today and I'm like, man, some of these stocks are moving huge. And it's a lot of stocks that have been just hammered lately. Like look at Amazon, about a 3% move, Meta 3.5%, Honest 3.5%, Estee Lauder almost 4%, AMD almost a 6% move, Google McDougal a 6% move, Palantir's 6% plus move, SoFi almost an 8% move. But you look at that and you got to say to yourself, is this real or is this just a dead cat bounce, right? You got to look at it from kind of that perspective. I posted this on X this weekend. Man, if you told me 10 years ago, 800,000 plus people would care about I ordered a Tesla, I would have been like, you got to be kidding me, man. That's crazy. But I ordered a new Tesla, right? And this is very, very intriguing because I ordered that Tesla and my Tesla hedge gets destroyed today on the back of my one order I placed for my new Model X. Look at that, down $7,300 on my Tesla hedge here today. Now I'm only at a $2,500 profit on that one. Oh boy. Okay. 3 core subjects we're going to speak about in this video here today. First one is, where is this market head from here? We're going to talk about that in depth. Okay. Second thing is, what is my plan with that Tesla hedge, right? Like, when am I going to cash out of it and say peace, and move on, right? Third, if I sold that Tesla hedge today, what stocks would I buy with the money right now? We'll speak about that in this video here today. One thing all I need from you guys, and it's as the sign in my garage says, all I need you to do is just smash that like button. I appreciate everybody that's already done that. You didn't even need me to say it. And if you haven't already, please join the Smash Gang. That's all I ask in this video here today, okay? Additionally, if you want to be subscribed here, you can certainly subscribe. Very exciting times, ladies and gentlemen. We are 3 days away from the big 1000X sale for Black Friday. 3 days away, folks. So pinned comment down there if you want to receive that sale. Keep in mind, I will not be recording a video Thanksgiving. I will be spending that time with my family. And by the way, happy Thanksgiving to everybody out there in case I don't speak to you between now and then. So if you want to receive that sale, make sure you click the pinned comment down there, enter in your name and info, and we'll send over the deal as soon as it drops, okay? Because once again, I will not be recording a video on Thanksgiving, okay? Additionally, when you receive that CL for 1000xstocks.com, you will receive your Steel membership card sent to your house. That should be sweet, okay? Alrighty, ladies and gentlemen, where's the stock market headed from here? Well, let me tell you where it's headed from here. If you look at crypto first off, okay? Crypto has stabilized over the weekend, right? Bitcoin trading 88, 89,000. That was, at the lows, it was down to like 80,000. Ethereum has stabilized now. If we went back just a few days ago, it was 2,700, now just under 3K. So this is a step in the right direction. The fact that crypto stabilized over the weekend. But let me push back against this for just a moment. In order to see real stabilization in any asset class, I don't care if it's a stock, the market indexes like the NASDAQ, the S&P 500, I don't care if it's Bitcoin, I don't care if it's Ethereum, you really need to see stabilization over at least several weeks, if not a month-long plus stabilization period. For an asset to stabilize for a few days, it's a little positive, but it's not like you can't just say, oh, we made it out. We're out to the other side. It's stabilized for 3 days. Like that, we won. Like it's over. It's all up from here. Doesn't work like that. I can show you every crash period we've gone through. Assets would stabilize for a few days. Remember, many of the biggest up days in stock market history were during the great financial crisis when the market was still crashing. So you would have big bounce back days, right? Where assets would stabilize, things would be like, okay, it's okay. And then they just go lower. 2022 is another good example. Like the market would stabilize for a little short-term period of time. At the end of the day, where it just keep going, it just kept going lower, right? Additionally, if you look at the Bitcoin cycle, which we'll see if this ends up being correct or not, but as of right now, we're supposed to technically be bouncing when it comes to Bitcoin just a tad bit here for like basically now and maybe the next couple days here. But basically, Bitcoin is supposedly supposed to go through massive downside Thanksgiving to Christmas. Okay, Thanksgiving to Christmas, Bitcoin is supposed to go through major downside. And basically, we can talk about just after Christmas, Bitcoin should supposedly be trading at 60-something thousand. We'll see if this whole Bitcoin cycle thing ends up being accurate or not. But if it is accurate, just understand there's going to be a lot more downside for Bitcoin, which will obviously bleed into the stock market as well, because that's how these financial markets move nowadays, right? After New Year's, essentially, then Bitcoin's supposed to go through a big up cycle until it peaks, we can call it 80,000 plus. And then it's supposed to go through another massive down cycle, bottoming in basically Q4 of next year around 30,000. We'll see. Don't, bank on this happening or not happening. Just keep in mind, if this Bitcoin cycle whole dealio plays out, like this is the way it's supposed to play out. So, don't get too excited, don't get too down, those sorts of things. Now, when I look at the market in general, I want to look to the generals. I want to look to the big dogs. I want to look to our fearless leaders. How are the fearless leaders of the stock market doing? That's going to give me some intel on, are we actually getting a real bottom in the market and we're starting to head up from here? Is this just dead cat bounce? So I'm going to look at NVIDIA. Now, there's something I noticed with NVIDIA stock that's very interesting today. I was looking in, the NASDAQ, the Qs are up like 2.5%, 2.7% today. And yet NVIDIA couldn't even match that. Like I'm watching it throughout the trading day and it's only up 1%. It looked incredibly weak on Friday. And you have to ask yourself, if the stock market's ready to bounce, right? If we reach the lows already and we're going to bounce from here, you have to ask yourself, why is NVIDIA not bouncing? Why was NVIDIA not up 5, 6, 7% like some of these other stocks today? That's our fearless leader. That's been clearly the stock that has led us out of the lows of 2022, that peak, that bottom in 2022. The stock that let us out is NVIDIA. It's the big dog of big dogs. So you'd have to think, if there was actually real confidence, we have bottomed out the stock market, all the damage is done, and it's up from here, you would have to assume NVIDIA would lead us out, right? And the fact that that stock is so incredibly weak makes me question things, right? Because on Friday, remember I was on X posting on Friday, I said, NVIDIA had been basically green that entire trading day. And I said, this stock looks like it wants to go red. Keep an eye on it in the last hour. And sure enough, it ended up finishing red. It ended up going down like almost 1%. And that was after almost the entire day it was green, nicely green at that. And it gave up all those gains. And to see it underperform the NASDAQ so severely today It makes you say, why? Like, well, why is that stock so weak? We know the numbers are great. We know the guidance is great. We know 2026 is going to be great for their numbers, but yet nothing for the stock? Smells a little fishy, does it not? Oracle. Look at Oracle stock. This adds to the sketchiness. This stock cannot bounce at all. Like, this one just keeps going. Like it's up 0.29% today. Put me to sleep. Like, basically the Nasdaq's up like 10x more than that. So the fact that Oracle is so weak adds to sketchiness and makes you say, like, is this really a real bottom today, or is this just kind of a little bit of a dead cat bounce situation in regards to the market? Now, one stock I can tell you that is not dead cat bouncing, it's Google McDougal. This stock is one of the strongest stocks in the entire stock market right now, if not the strongest stock in the entire stock market right now. It is incredible. Stock hitting $319 here today, up another 6.5% in the last 6 months. This stock, and this is a mega cap, so it's shocking it's made this big of a move the past 6 months. It's up 86%, okay? I've got great news for Google McDougal shareholders. If you're a Google shareholder, I've got great news for you, okay? Google stock climbs after this analyst says Google will emerge as a major winner in artificial intelligence and cloud computing. Analyst Nick Jones, who initiated coverage with an outperform rating and a $355 price target, said Google's mix of search dominance, YouTube's ad scale, and steadily expanding Google Cloud business positions it well for the next phase of AI adoption. The analyst said Google's recovery has accelerated in recent quarters as regulatory pressure eased and investor confidence improved around its long-term AI roadmap. He added that the company's ability to show visible AI progress across search, ads, and enterprise workloads could support further multiple expansion. We see Google as an AI and cloud winner, says the analyst, adding that YouTube remains one of the strongest global video ad platforms at a time where marketers are shifting budgets toward measurable formats. Okay, here's the deal. Here's why this matters so significantly, okay, in regards to an analyst like that. Listen, if we went back 6 months ago, 9 months ago, 12 months ago, the analyst community was insanely bearish on Google. Like, they just didn't have a lot of positive things to say for the most part. All the Wall Streeters were doubting Google search and disruption and all these sorts of things. Okay, listen, at this point in time, that is a thing of the past. That is a thing of the past now at this point in time. Absolutely no one is doubting Google anymore, which means the stock can continue to see momentum because people are going to look at the stock and they're going to look at it from a risk-reward standpoint of like, this is a moneymaker. It's a stock with insane momentum in a market that is shaky right now, right? And additionally, people are looking at it as not that risky because you took the risk off the plate now. The risk was, they're going to be disrupted by ChatGPT and blah, 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 right? And they're not going to be successful in AI. Now people are like, they're looking pretty darn successful. And I don't know if you guys got to see this news. This was pretty huge. Google Gemini 3 crushes benchmarks and outperforms ChatGPT. Google just delivered something remarkable with Gemini 3 and the launch of Gemini Agent. It feels less like another model drop, more like a blueprint for how AI should slot into real work, not incremental tweaks, a coordinated release that pairs stronger reasoning with practical enterprise-ready tools that can reshape how we handle digital information day to day. Now, this is pretty significant because Gemini 3 Pro just topped everybody on the leaderboard. They basically have this leaderboard which kind of ranks like who's doing the best in regards to their AI models. And Gemini 3, they ran it up on Grok. They passed up ChatGPT. They passed up everything. And so they are number one now at this point in time. And so Gemini is looking pretty darn impressive. I personally use Gemini. Whenever I am using AI, I would say and I don't use it a lot, but if I do, like 90% of the time, I'll use Gemini. 10% of the time, I'll use Grok. I never use ChatGPT. And so, just keep in mind, Gemini continues to be pretty darn successful and get more successful. And that comes as no surprise. Like, we know Google's been way out in front of this, working on this for decades when it comes to this technology, right? Now, that leads me to Salesforce stock, because if you look and you kind of read through this commentary here, right, talking about enterprise tools, talking about how enterprises are going to work in the future and whatnot, right? This is more proof, in my opinion, that Salesforce is pushing in the right direction with their agent force and everything they're up to there, okay? Google will lose to Salesforce long term when it comes to enterprise tools. When it comes to enterprise cloud, obviously Google's a huge winner there. But when it comes to a lot of these enterprise tools, Salesforce is always going to be great there because they're always going to have tools that are good enough, right? And they have you in the ecosystem. The ecosystem is so important. It's the same reason why people can't leave the Apple ecosystem. Once you have somebody in the ecosystem, you can't, it doesn't matter what phone Samsung comes out with or Google comes out with, like they're not leaving to an Android device, right? And so the very similar phenomenon happens with Salesforce, where they get companies, businesses, enterprises into that Salesforce ecosystem. And once you're in that Salesforce ecosystem, like you're just sold the next product, and you just can't get out. And so Salesforce, like, this is just more proof that they are in the right direction, because the fact that Google wants to push harder means that this is a big opportunity here. And so Salesforce is at the forefront of a next big kind of, in my opinion, positive inflection for their business model over the next several years. And you'll see that really come through with Agentforce and their other products they'll be launching here. Okay. Now, Google McDougal just became my 6th stock in the public count out of my current positions to hit a triple-digit gainer with a 102% gain. That only trails Revolve at 106% gain, SoFi at a 229% gain, Meta at a 432% gain, Elf at a 878% gain, and Palantir at a 2,111% gain. AMD, it was at a triple-digit gainer, but it dropped off, so AMD, next time it bounces a little bit here, we'll be back into the triple digits, and we'll have 7 current positions in the public count with triple digit gains. And keep in mind, it would be 8 if it wasn't for the fact that I sold Tesla, because Tesla, I put $13,000 into that and made $279,000 out of that. So that was like a, we can call that like a 2,000% gain or something insane, right? Now, if you want to know the next Google stock, the next one, in my opinion, that's going to make a big run, it's going to be Adobe, in my personal opinion. I think that's the next Google stock type situation here. I think Adobe sets up like Google did last year, where people are doubting it. There's so much negativity around the stock. The stock's down 38%. No one's, looking at them seriously and whatnot, right? And I think Adobe sets up so well. Looking at a stock here that has a forward P of 17, earnings per share growth of very strong double digits expected next year, revenue growth of, double digits. And I think they're going to be doing double digit earnings per share growth for years and years and years to go into the future, right? Their products are very sticky company, right? We're looking at 1000xstocks.com right now, right? Look at the charts feature of Adobe. Does that not look like a perfect stock? Like, it doesn't get more perfect than that. This is where Adobe's at right now. This is where Adobe's been. This is where they're expected to go. That's a perfect stock. Adobe is literally perfection. Look at the margins here. Whenever you can have a company pushing gross margins near 90% and net margins around that 30% number, you're in a perfect stock. And Adobe is that company that pushes these gross margins to near 90% and net margins of 30%, right? It's incredible. Look at the trailing 12-month earnings per share growth of this company, right? It's clearly on the right trend, and look at what's expected to happen to their earnings per share growth over the next year or two. Unbelievable. Additionally, look at the operating cash flow trend. This is where we're at right now on a trailing 12-month basis. Look at the operating income. This is where we're at right now on a trailing 12-month basis. And look at the shares outstanding of Adobe. Down, down, down. So they continue to buy back shares, continue to take shares off the market while their profitability continues to increase. At the end of the day, eventually people will give up on the whole bear narrative around Adobe like they have now for Google, and then they'll start to take Adobe more serious. And so I think if we look out a year from now, I think we're going to have a very similar phenomenon that has transpired with Google in the past year. And people will give up on basically this bearish narrative and be like, okay, we just got to buy the stock. It's a money maker, man. These companies are some of the best business models in the world, right? Adobe's got one of the best business models in the world, bar none. They got a subscription business model that just keeps renewing and recurring and sticky. And it's like they sell more products and services to their customer base. It's incredible. So yeah, that's that. Now take it back to the market, right? My bottom line is I don't trust the market until January. In January, I can begin to trust the market again. But I just don't trust this market short term. I know the market's supposed to be amazing in November. The market's supposed to be amazing in December, right? I don't trust it right now, right? Now, does that mean I'm not going to buy? Heck no. I love to buy in a market that's not trusted. That's one of my favorite markets to buy in. And speaking about that, I just made a big announcement just last night inside the private stock group. I said, FYI, I just bumped the public account to $1,000 a week for buys from $500. I also just increased the amount I will be buying in in all my private portfolios each Friday. This is set to run through December 2027. I'll be doing some pretty substantial buying weekly the next 24 months essentially, right? So I'm bumping because basically I have certain amounts of money that are going to go into all my portfolios, right? The Patreon portfolio is $250 a week. The public count was 500. I'm bumping that to 1,000. And then I have a certain amount that goes into several of my private portfolios as well. I bumped them all up. And so I'm ready to come in with big buys, which means I'm expecting kind of a shaky market here and there. And I see a lot of great deals out there right now. There's so many stocks I want to buy right now. So many that I'm like, I have to up my weekly buys. I have to do it, man. And so I'll be up in my weekly buys for the next 2 years, essentially, and it's going to be fun times, right? I also wanted to draw you guys' attention to this because this matters significantly with this whole market drama recently, right? How often does a stock market decline? 1% drop happens 50 to 60 times a year. A 3% drop in the market happens 7 to 8 times per year. 5% drop in the market happens 3 to 4 times a year. So that's what we had here recently, right? That happens 3 to 4 times a year. 10% drop happens just over every 1 year, so every 1.1 years. A 15% drop happens every 2 years. A 20% drop happens every 3.5 years, and a 25% drop happens every 5 to 7 years. And that's an S&P 500 average since 1928. So basically, looking back at the past 100 years roughly. The moral of this story is when we go through these 1 to 5% drops in the market, don't freak out. Like, that's just normal, man. You're going to have that happen several times per year. This is nothing, okay? 10% drop. Now we're talking. Now we can start coming in with some big buys, right? And keep in mind, if the market ever drops 20% plus, you're in a freak time and you better be buying with both hands as much as you can possibly get your hands on, okay? Because those 20% drops very rarely happen. And it could be years and years before you see another 20% plus drop. So you better take advantage of that. Always remember that, ladies and gentlemen, okay? Alrighty, next up here, my Tesla hedge plan. Let's get into that, and then we'll talk about if I did sell my Tesla hedge, what stocks would I buy right now, literally today? What are the best opportunities I find in the stock market, okay? Listen, my plan with the Tesla hedge. My plan is to cash that hedge at some point in the first quarter of 2026. That is my plan as of right now. Now, a lot can happen between now and then. Let's say hypothetically, this market can't be trusted, and let's say it goes down a bunch in December. Let's say we have a rough December. Let's say Santa Claus just gives us a big stock and a coal. You might see me cash that at the end of December or maybe even the beginning of January, right? Now, let's say market stays fine, maybe even starts to bounce back, maybe even hit all-time highs by the end of the year. Then I'll likely carry that through into deep into the first quarter of the year, essentially. Okay, because remember, that's a hedge, so it's there for protection. It's like insurance on the portfolio is the way I would look at it. So it's there in case things go bad. If things go bad, I'll cash. I'll take my profit and I'll run. If things don't go bad, I'll keep it as insurance there, right? So that's kind of my perspective here, right? Now, the fact that that post got 871,000 views is crazy. Like, it's like the fact that I just posted like, oh, I bought a new car. Like, that's wild to me. Wild, right? No, I answered a very important question on X because somebody's like, $123,000 to spend on that? Why? What are you thinking, Jeremy? Like, just invest that money, right? And this was my response to that, right? Because it's fair, like $123,000, if I took that money, I'm buying this vehicle cash. If I took that money and you could run the numbers on it, I invested over the next 5, 10, 15, 20 years and got 10% return, 15% return, 20% return, whatever. It's a lot of money, right? And I said, people ask me, why not just invest $123,000? I said, I invest plenty. I'm a huge believer in spending money also and supporting jobs, people making a living. I don't just hoard money. I love to spend at local businesses, big businesses, and everything in between. I also love to give to charity. December is actually my big month. I give to a bunch of different charities out there. It's something I started many, many years ago, and I like to do that. I said, a lot of people support me, so I love to help support others, right? And by me buying that vehicle, factory workers can make money off that, and a bunch of companies can make money off that, and Tesla can make money off that, and right? And it's just like, what am I going to do? Hoard all the money? Went out to dinner last night at North Italia in Summerlin, and $195, and the waitress gets a $40 tip, and some of that can go to the bus boys and all that stuff, and the chefs make money off that, and it's great. Get to have a great time with the family. And, I could have just stayed in. We could have just ate ramen noodles last night, but I like to, support the economy. American Express can make money off that. Everybody makes money off that, right? Like, come on. Like, or they wouldn't have made that money, and then, the chefs in the back room wouldn't have had as many hours, and, the waitress wouldn't have made as much money, and the busboys and all those sorts of things, right? And so when you climb the ranks of having money, you want to allocate that money in an intelligent way. You always want to basically be investing more than you're spending, right? That's very, very key. You got to always have more income than expenses. And so that's something I've done my entire life. But with that being said, I don't play this game cheap. I like to support people because I think about my childhood. And when I was born, right, my family was very poor. My dad was working at, used car dealerships and all those sorts of things. It was like, a struggle, right? And trying in and out of jobs and working for people and just a struggle, right? And then he started his pool cleaning business around 1994, I believe, 1995, right? And through building that business over the time, and I would go to work with him all summer, every day, right? We'd go clean pools and do service on pools and whatnot, right? And clean fix motors and put in new filters and all this stuff. We were able to move out of that area into a nice middle class area or upper middle class area. And I was able to get around other people. And it was a type of school where, everybody was going to go to university, and, by having friends and girlfriend that were doing very well for themselves, it got me to really open my eyes to the world some more, right? And got me to see there's other possibilities out there. And through that, I ended up going to community college. And through community college, guess what? I ended up getting into accounting courses and took several accounting courses and got into business courses and marketing and realized I'm very, very passionate about business and all this sorts of stuff, right? But if it wasn't for all my dad's customers, giving him a shot, right? And hiring him to clean their pools and fix their pools and all that stuff, right? That would have never happened, and I probably would have been in poverty forever, and maybe I never would have went to college. Maybe I would have never got that spark, that idea of business and investing and all these sorts of things. So I think back to then and how that changed my life. So I'm I like to pass it forward, right? Like pass it forward. Right now I'm building a house. It's going to be a $5 million house when it's all said and done. $5 million, right? I could have just hoarded that money. I'm not spending anything. Live in an apartment or whatever. I could have done that, but that gives a lot of people job opportunities. I go by that house sometimes and see the construction, how many workers are working on that house is insane. And the amount of companies that will make money off that house being built and the amount of equipment, right? It's great. It's great. You know what I mean? I got it. I can spend it and, support other people. A lot of people support me. And so I never look at this game as just hoarding money. I look at, you got to build up the ranks, continue to build your wealth, but don't just hoard. Don't just look at it from the perspective of basically I would call it scarcity mentality, because I think a lot of people in this world have scarcity mentality, and it's not a healthy thing to have. And I think especially when you're a business owner, when you're doing things out here in the world, when you're an investor, you want to have abundance mindset. You don't have abundance mindset it's going to be rough, right? Because we could all say we're not going to buy any new vehicles, we're not going to buy any new houses, we're not going to hire anybody to landscape our yard or do this or do that, right? And we're going to have ridiculous unemployment, and then no one makes money, and it's just ridiculous. I believe in abundance mindset. I moved to that mindset many years ago, and it changed my life. I can tell you that. Being over here in this scarcity mentality, a zero-sum game, the world's so unfair. Oh, they have so much, I have so little. It is so unhealthy, man. It's a brutal place to live. And when you're in that mindset, this world's no fun. I just tell you that, man. This world's no fun. Over here is a blast. When you think things can get better in the future, when you think companies can grow, you can grow, you're going to grow your net worth, is a game changer for you. And you see that opportunity. The fact that some guy has $1 billion means it changes nothing with my life. If somebody's watching this video right now and you just made $1 million in the stock market today, great for you. That means nothing to me. That's phenomenal. I'm super happy for you. I'd much rather have you make $1 million today than lose $1 million, right? That's great. It doesn't hurt me. Are you kidding me? That's amazing, right? Maybe now you can buy 1000xstocks.com on the great sale we're going to have, right? That's phenomenal. I want everybody to do great. If some guy got a new job today and he's got, became CEO of this company and he's watching this video right now and now he's going to make $10 million a year, that's amazing. I'm super happy for you. I'm not looking at myself feeling bad. No. That's not how the world works. Now that you could make $10 million a year, you're going to be able to spend a lot of money. Maybe at a lot of companies I own. Maybe you're going to go to Wynn Resorts, spend a bunch of money, right? Might go to North Italia, celebrate. Cheesecake Factory, baby. Use your American Express card a lot more. maybe use some PayPal, all that good stuff, okay? So that's the way I look at this game. It's a little different, right? Abundance mindset, very, very healthy. And if you're an investor, if you are an entrepreneur, you got to be over here, man. You're not over here, it's going to be tough. It's going to be very, very tough, okay? Alrighty, now let's talk. If I sold my Tesla hedge today, the cash out of it, let's say it's $50,000 or whatever, what stocks would I buy? Keep in mind, this is very difficult because there's so many stocks I want to buy. Like I'm looking and I'm like, oh my gosh, there's so many stocks I want to buy right now. It's ridiculous, okay? Okay, so if I had to do it, here's what I would do right now. I would put $10,000 in Adobe right now. Forward P is 17 on that stock, double-digit earnings per share growth, double-digit revenue growth, for them expected in future years. Like I think Adobe is just a great buy. It's a hated stock. I see it as next Google in regards to a hated stock that will be loved a year from now. Okay, Salesforce, CRM, $10,000 I would put into Salesforce. They just got their acquisition done, their next big acquisition done very, very recently here. Analysts have them only growing revenue 8-9%. I think they're about to go double-digit revenue growth again because of the acquisition and what that's going to add on to the business's revenue. And then additionally, Agentforce is really going to start to show up as a big revenue driver, in my opinion, 26 and 27. So I think their revenue growth could actually start to accelerate back up to double digits again. And I think that's what a lot of analysts are missing in regards to Salesforce. Benioff, you don't bet against Benioff. You don't bet against Benioff. That dude is a business legend. Talk about not having scarcity mentality. That man definitely has no scarcity mentality. And, Salesforce 27 forward P, you might say that's a little high. Not if this company's going to grow earnings per share at an extremely strong double-digit clip and grow revenue at a double-digit clip. That's not strong. That's not high P at all. And keep in mind, a lot of their contracts, they lock in their customers for years. So, and their customers are like the best customers you could really want, like enterprises. So Salesforce, I love that one. Big opportunity there. I'd put another $10,000 in Amazon, a stock that's very hated right now. Forward P of just over 30 on the stock's way too cheap. Keep in mind, Amazon should have double-digit earnings per share growth and revenue growth each year for years going in the future. People are really questioning the whole depreciation thing, which has been a fair subject, and I spoke about that on the channel a lot recently. But Amazon's always been asset heavy. I spoke about this several times over the last week or two. Amazon's always been asset heavy. Yeah, they're spending a lot. Yeah, they're going to have big depreciation. That's nothing new for Amazon. Amazon's always been a crap margin business. I should have pulled up Amazon's margins on 1000X as well to show you guys. Amazon's gross margins, net margins have always been crap. They're going to remain crap for years to go in the future, and that's fine. At the end of the day, Amazon's on the path to $1 trillion plus revenue company and being the first company in history to do $1 trillion plus of revenue per year. And they're going to likely hit that in the next 3 years, ladies and gentlemen. That's incredible. So that's where Amazon's headed. So yeah, Amazon, I love that as a buy right now. More stocks I'd buy. I'd put $10,000 into Cake. 2-year forward P on this one, a 10 with, this company has a, 10-year plus track record of growth ahead of them. There's such an opportunity for the North Italia expansion, the Flower Child expansion there. I'm just baffled that it's trading at these sorts of PEs, but it doesn't really matter. The bottom line is I'm getting a great deal. I'll continue to acquire shares, right? Double-digit earnings per share growth likely on this stock over the future years. Celsius trades at a 23 2-year forward P right now, which is way too cheap for a company growing at these sorts of growth rates. Celsius is going to be growing at here. And then Elf Beauty trading at a 2-year forward P of under 20 right now. With the sorts of growth rates Elf is going to have over the next few years, that's trading way too cheap as well. Keep in mind, Celsius is on its way to becoming a drink giant. I always love to buy companies before they are a giant. I love to buy companies before they're the giant, but it's clear to me they're becoming a giant, right? So SoFi is a good example. I look at SoFi and I'm like, this is going to become a banking giant over time, right? I looked at Palantir years ago when I was buying shares of that stock like crazy, and I said Palantir is the next, massive company likely, and we can put it the SaaS related space, right? And then I look at companies like Celsius, Elf. I'm like, this is all three of these stocks, Cake's the next massive restaurant giant. Some might already consider it. I actually don't yet. I think they're on their way to becoming that, essentially. Celsius, I think that's going to become a brand name that everybody talks about in the stock market in the next 5-10 years. Celsius is on their way to becoming a drink giant. They're not that today, but they're clearly, in my opinion, on their way to becoming that. And then Elf is on their way to becoming a cosmetics giant. They're not that today, but they're on their way to becoming a cosmetics and beauty giant. And so those are three companies that I'm just like, they're the future. They are the future, but it's at a point in time where it's I think it's more obvious to be able to see it now, right? So no, but there's a lot of other stocks. Like there's so many stocks I want to buy. I don't know if you guys got to see this video on the reaction channel. It's called Jeremy Lefebvre Makes Money. I did a video on Friday called 14 stocks I just bought. And I went over all the stocks I bought last week, essentially, because there's a long list of them, man. There's so many deals in this market right now, which once again tells you why I'm upping my weekly buys, because man, there's a lot of opportunities in this market. But the biggest opportunity out there is 3 days from now, ladies and gentlemen. The 1000X sale is coming. That's for the entire software suite, the education portal as well, which I need a lot of you guys need. So I don't care if you're a beginner investor, intermediate investor, or an advanced investor, 1000X is the product for you. We got investors that use 1000X that are literally just have their first like few $1,000s invested. We have people that use 1000X that have $10 million plus portfolios. So it's for everybody in between. And that will be the pinned comment down there to sign up for that. And once you join us in there and you get that sale, we will send you your Steel membership card, which I have one right here, your 1000X Steel membership card. This is a 2024 edition. You will receive the 2025 edition. All right, guys, much love as always, and have a great day.